Good morning, Stonkmerica. Welcome back. My name is Rocky Outcrop. We're going to be taking a look at the financial markets today. This is your financial morning show. Good morning. It is tea time with Rocky. No tea, that's fine. Have coffee. I hope you're feeling very well and relaxed after your nice long weekend. Nice long weekend, 3-day weekend. Now, the vigilant viewers amongst you will, of course, remember on Friday when wished a nice 3-day weekend. I disdained at the Glaswegian education system and says, I don't know what they're teaching you over there. There's only 2 days in a weekend. Well, more fool I. More fool I. It has, of course, been a nice weekend. I hope you're all doing very well and, of course, relaxed. It's tea time with Rocky. Have you got English breakfast muffin, perhaps? And to those in the UK, are you enjoying your lunchtime? It is, of course, 1:30 UK time, 8:30 a.m. EST, or whatever you call it over there on the East Coast of the United States. New York, what a wonderful place. Well, we'll be taking a look at the New York Stock Exchange and all that. Whoa, Dead Money All Stars jumping in here with the big news of the day, of course, telling everybody that the Wheel of Time TV series gets released on November the 19th. Something that I like a lot. Chris Sweeney dropping in £5 here, start of the day. Thanks so much, Chris. Really appreciate it. Cheers, Rocky. 2 out of 2 Cardano trades, ADA, that's what that means. Successful. Love reading up on the Fibonacci numbers and sacred geometry. Well, interesting stuff like that. Fantastic. Cooly schmooly. Excellent stuff. Scott Butcher says, afternoon, Rocky. Good to see you. YouTube is lame. No notification. Thanks for the tweet, Rocky. My man. Oh, thank goodness the tweet worked. I get notifications from people telling me the tweet doesn't work sometimes, and I don't know. Right, yeah. Ooh. Also, Katie says watched Outlaw King last night. Well, this is a financial morning show, okay, of course, and we'll be talking about those sorts of things soon. Plenty of stuff to talk about. I mean, we can talk about Wall Street aims to build on gains after jobs let down. We can talk about the SEC chair Gensler, eyes corporate disclosures, stuff like that. News stories that we've got that we can talk about. But we also have our own sort of personal interests and entertainment side of things to consider and all that good stuff. And we have, of course, the greatest Netflix movie to discuss. If you haven't already seen, it is called Outlaw King. It is very good. It's all about Scotland. Highly recommend it to everybody. Glad you enjoyed that one. I really enjoyed it. So good. Yes, so very good. What's my name? What's my name? That's right. Well, anyway, my name's Rocky Outcrop. Corpse Brigade. I hope they don't butcher the Wheel of Time. Take a look at that trailer. In fact, screw it. Let's take a look at that trailer together. Let's look at the Wheel of Time trailer. Joanna. Somebody shared the news article, by the way. One of the things that we do on the show is talk about news as shared by you in the Discord. So if you're a member of the Discord, which a lot of you are, and if you aren't, you can get access to that through Patreon. If you're a member of the Discord, then you can share news, and I'll be tempted to then use that news articles as part of our news chat for the day. And here we have this fella here who's from NYC, and good morning to you, my friend, as well. It is 8:35 after the hour where you are. He's talking about the death of downtown NYC. Anyway, we've had enough of that guy's news. Instead, we're looking for the Wheel of Time trailer, because then you get to see it. And this is cool because I've not really watched it properly myself yet. So let's do it together. Amazon Prime Video. Hope you don't mind me using this. This, of course, is actually, funnily enough, counts as what's it count as? What does this count as? What do they call that stuff again? Fair use, because this is a reaction to the trailer. It's a fair use thing. I'd actually wait. Wait, hold on a second. I think I won't be able to do this. I don't think you guys can hear the desktop audio. I'll add a source. I'll add a source so that you get to hear the desktop audio. How does that work? Add a source. I'll go audio input capture, audio output capture. Yeah, audio output capture. And we'll just call that default for now. Let's see, does this work? Does it make sound? Yes, wow, brilliant, fantastic. So we can do this. Cool. So yeah, I hope they don't butcher it either. This is actually, I really need to make sure everybody knows. This is a financial news show. We do a financial news show. No, it isn't. I hardly talk about news, hardly at all. This is a technical analysis show, if anything. Technical analysis is the study of charts and price action to determine the potential future price action and therefore be able to manage your risk appropriately and make money in markets. And we do that really effectively on the channel. And this is a community where we help each other become better traders, financially independent, and we're growing all the time. Of course, there's 10,699. That's right, I lost one of the subs over the long weekend there, lol. And subs on YouTube, there's 1,750 members of the Discord. There's and the long-term sort of goal for the community is to have at least 1,000 really good traders as part of that community. It's something that I've been working towards now for over a year and a half, and it's something that I'll continue to work towards in the future. And it's really, really, really fantastic that all of you make that happen. You know, you make this community a real thing, and I want to say thanks to you. So things that we'll be looking at in today's show, of course, include things like Naked Premarket in there at that price, 64 cents, closed off on Friday at around about 61. You've got GME here kicking around pre-market 203. So we closed off at 202 on Friday. That's okay. You know, we've not had massive moves pre-market on that one. We'll be talking about AMC right now. It's pre-market price up there at 45, having closed at 44. Now, again, you know, it's maybe in terms of absolute values, not huge, etc. up there, but you can tell in terms of this chart here, that's a fair enough distance away from where we are right now. And then there's other things, lots and lots and lots of other things that we can take a look at. AMAT, for example, other stocks that people like out there. This one kicking around about 135. MMAT, we've got Metamaterials over here. It's in there at 551, closed at 549. We've got AHT, for example, in here, putting in a little bit of a potential. Oops. This is the 5-minute time frame. Anyway, coming in here at 1475 at pre-market, back down, testing our support essentially, and that's what's happening right now. There's plenty of things we could talk about as well beyond that in terms of indexes. You know, you've got our indices or whatever. You've got the SPY in here operating at 453 at the minute, which is obviously very, very close to its all-time highs right now, where we've set them in just last week, etc. And then you've got commodities. You know, we like commodities here in the channel as well, something that I've looked at a little bit recently. Let's just see how soybean meal futures are getting on here, and it's at 338.2. That's where it closed out. Or actually, it's where it's actually open. Sorry, I should say at the minute. It would have opened up last night, wouldn't it? Again. And yeah, so that's where that is, 338. These are the sorts of things that we've taken a lot of looks at recently. Here's other ones, gold, for example. So you can see that we cover an awful lot on the channel. Now, the reason why we talk about AMC and GME so much is because of the MOAS potential. If you don't know what MOAS is, by the way, then you've been living under a rock for the last wee while. But MOAS is the mother of all short squeezes, and it's absolutely something that could happen with these stocks. Now, with GME in particular, we're looking at a stock which has got a fairly low amount of shares that have been issued, and they've been shorted, it seems, to a larger degree than the shares which actually exist out there. A bit of controversy with regards to all of that information, and a lot of discussion about it across the internet. And it's part of this thing that you might have heard about if you're just new to the channel, etc., to do with how there was that meeting where Congress got together to discuss the volatility surrounding certain stocks in January. Now, this volatility surrounding these stocks and a normal sort of blow off top short squeeze thing that happens should have resulted in the shorts in the price of that stock losing 80% or more of its value. Should have gone all the way back down and stayed down below the $40. Now with GME, it's remarkable because it did this massive rise up from $5 to $400, and it's actually still up there at $200 at the moment, with the potential to actually be trending long term to become one of the biggest companies in the world, regardless of MOAT. So it's a really interesting opportunity with loads of discussion about it, which is super relevant to the markets as a whole on the wider front, which is why we've got the likes of Gary Gensler, etc., the chair of the SEC, talking so much about this specific event with extreme amounts of interest, even to the point where you could look at that recent Rick and Morty episode that came out there, episode 10. I think it's the last one of the season, and they're talking about how there's all these sort of synthetic Mortys and and stuff like that. And it seems, it's like there's little references in there. You got Rick at one point saying about his ape, his primate story. If you want to know my primate story, he says at one point in there, and stuff like that. Little things like that, which make you just kind of think, hey, what's happening in the wider scheme of things? So many people are talking about this. Anyway, that's what we talk about, right? That's what we talk about. But before we do all of that, because I'm going to have relaxed week this week as much as possible, and we're coming up to 45 after the hour. So what I'm going to do for the next 2 minutes is just check in with chat, see how you're doing. Put a poll up, maybe ask if you want to actually see that trailer. Regardless of the answers of that poll, we're then going to watch that trailer. So I'll just put that poll up there now. Watch what trailer? Question mark. Yes, no. Ask your community. You can vote on that. It's happening anyway, by the way, folks. And that's coming up. So from well, how long does the video last? So I can just kind of come up with a schedule here. 2 minutes and 19 seconds. Cool. So from 45 after the hour until 50 after the hour, we'll react to this. Now, what is this thing, you might be asking, in fact, and all that? Well, it's one of my favorite things that I had growing up, and right up until just a few years ago when the last book came out. So how are you getting on in the chitter chatter? I can see I've got live chat up. Some people voting against it. Sorry, Sod's Law. Sod's Law? I don't know. Sod's Law. It's actually the golden rule in effect over here. The man with all the gold makes the golden rule. Well, in this situation, I'm the guy with the gold, and we're going to be watching this trailer together. Anyway, natural friend, Katie, I've got my oxygen strapped on early, folks. Ooh, okay. When Ambo, right, yeah, totally. When Ambo says banana fridge, banana fridge. Never enough, always enough. Never. I was going to say that, but I have 16 and a half, lol. Right, cool. So, don't know what you're talking about, but what I'm talking about for the next 5 minutes is this trailer, right? Now, look, if you're thinking to yourself, this is dissatisfactory, I want to be talking more about technical analysis, don't worry, we go super in depth on that on the show. And if you're thinking to yourself, this is unacceptable, I want to be talking about how the Gary Genslerized corporate disclosures to curb consolidation and all of that as well. And yeah, cool. We'll be talking about all of that sort of stuff very shortly. But what this is I guess, in a sense, a little slice of me. I really like this fantasy TV. They're making a TV show. I really like this book. It's a fantasy novel. It's a series. It's one of the most epic ones of all time. Now, people know all about things like Lord of the Rings and all that stuff, and I think Lord of the Rings, great, good stuff, but also can't stand it. Kind of a bit, something a bit about it. And then you've got stuff like Game of Thrones, right? And Game of Thrones was really popular. Everybody liked Game of Thrones, right? I think, more or less everybody liked it. It's not true, but most people did. And this is better. Right, this is better than Game of Thrones was as a story. Better story. It's not got like tons of weird monsters kicking about in it. It doesn't have that. It's just humans. Now, there is kind of like Lord of the Rings had orcs or whatever. This has got something called Trollocs in it. This world. This world is our world, by the way. And what they really essentially are is some sort of genetic slicing. So you can imagine, you'd taken the worst, the most fighty, aggressive parts of a bull and spliced them with a lion, and spliced them with a human. So you've got these bipedal things with horns, etc. There's some of that in there, sort of like genetic horrible mishmash army things that they use for the soldier things they use for the army type thing with the forces of evil, right? Okay, so there's that, but that's about as kind of as messed up as it really gets in terms of all that sort of crap. It's humans. It's a human story. It's set on what would be Earth and what in a world which consistently evolves, and like this sort of like but a cyclical nature. So there's different stages that the world goes through, and then it gets all the way back to kind of a reset level, kind of like what we're hoping to see happen with MOAS, right? And these people, so they're like that. And then it's not so also not super medieval, right? So there you go, slight introduction. Now we can watch this thing. 5:50 a.m. in California for you. Well, at 5:50 a.m. in California, welcome to the show, and we're watching this. I'm hyped, by the way.
The wheel of time turns, and
look at the production values
and pass,
okay,
leaving memories that become legend.
Love that book. Love that music. Love those production values. There she is, Maureen. Beautiful stuff. Ray Judkins is the producer of this one. He worked on other shows in the past, but this looks like it's going to be absolutely phenomenal work.
And women who can touch.
Love those CGI effects.
We protect the world.
Epic.
No matter what happens, what pain we face, what heartbreak, the wheel keeps turning.
Good actor.
The Dark One is coming for your friends.
Good. Dynadini there. Legend. Love that guy.
The last battle is coming. The only thing that matters is what you do.
Whatever happens now, there's no turning back.
That's it. That was a scary looking face. Tell you what, there's one of those Trollocky type things. New branding. Ah, yeah. Wow. I don't know if you could hear me when I was talking through that. Doesn't really matter. Wow, I think that looks epic. To me, it's super amazing. Really gonna enjoy that show. Yeah, sure. If you don't like, if there's times where you don't like, you know, what looks like kind of old school outfits, right? Maybe that's gonna annoy you. And if at times like you think to yourself, I really can't stand magic and stuff like that, then sure, that's not going to appeal to you. But if there's any sort of like epic storytelling, if you like things like, if you enjoyed watching Game of Thrones and if you enjoyed watching like Lord of the Rings or whatever, you thought it was enjoyable, but maybe perhaps it missed out on some of those real adult themes, and perhaps you think to yourself, hey, look, there's like Game of Thrones, right? Okay, really fantastic, and anthropologically in a way kind of represents how things were for people back in the day, but really underrepresented women in an awfully bad way. And you know, just kind of thinking about it, you know, it's kind of like, is George R.R. Martin a misogynist? Like, really, is he? Really? Like, think about it. Like, Arya as a kid, but what about all the adult women? They're all really awful. All the men are too, right? But it's kind of like, anyway, this story is, I think, going to be super fantastic. And there's something about it too people don't know, is that the budget for every episode of this thing is the size of the budget of the entire first season of Game of Thrones. They're going to be one of the most expensive TV shows, or probably the most by quite a distance, expensive TV shows ever made. They're putting real effort into it. You can see there, you've got these good actors in it, and I love it. Anyway, I'm willing to discuss this at great length with anybody in extreme detail. No problem. But let's go back to pretending that the most important thing in life is money. Right, you know, nothing, Jon Snow. Well, I tell you what, right. The Game of Thrones as a concept, in terms of the whole battling for control in a society, is like called Game of Houses inside Wheel of Time, and it occurs in like a part of the geography of the place. There's something like 2,500 named characters in the book. There's like hundreds of points of view. One way I've described this recently to somebody is that for me, Game of Thrones is the 14-book version of of a really highly entertaining and enjoyable The Tin Drum, almost, in terms of the way that it's constructed with the extreme amounts of detail that's everywhere that allow you to actually leverage that later on in the story to great effect. But instead of it just being across, sort of 500 pages as Gunter Grass's book is, the Wheel of Time is across 14 epic fantasy novels, all of which are 600 pages, to the point at which the author himself couldn't even finish writing the thing. He ended up dying before it was finished. So to be able to finish it off, they had to bring in some other writer. Now, this other writer, fresh-faced, relatively speaking, was young, and it had some success, and his main skill, in my opinion, resides in constructing pathos and actually, exploiting that for the progression of the story to cathartically and giving you emotions. Whereas maybe his dialogue and sort of world building isn't as on point, but all those things were taken care of in the story up to that point. And then, of course, what happened is he had to finish it off. And there's some things in the story which are the best parts of any sort of fantasy story that you're likely to have ever read, in general terms. So that would be my recommendation. Anyway, I like it, right? It's a personal thing for me. I don't expect everybody that likes, me to like that shit. I don't expect everybody that likes finance to like that stuff or anything else. This is just purely me telling you a bit of my story. It's one of the reasons why I celebrate massively whenever I see Horn Hunter coming into the chat, for example. Anyway, yeah, what's a book? Good question, Party Puppy. That's really funny, actually. For a long time there, for years and years and years, I'd say that to people when they were talking about books. I'd be like, "What's book? What's a book?" And then they'd make them describe it. I'd be, "Oh, right, those things. Yeah, God, I forgot they existed. Wow, those papery things. Yeah, that's right. Aye." But that was mostly to do with how I read books on digital formats. So right now here, with regards to the GME pricing, seeing it pre-market up at our resistance line at $203 at the minute. Doesn't is that accurate to say that? No, that's not actually our resistance line at $203. Sorry, it's just here. It's just the pre-market pricing thing is being pushed so much by these other labels. It makes it look like it's in the wrong place compared to where it actually ought to be. How about I just hide the Ichimoku cloud? That makes that a bit easier. Won't make that visual mistake anymore. So pre-market pricing not there, right? Just basically where we are, and we're looking up towards that 206 level, 208, 209 level to see if we can get that positivity at the start of the week. Now we've got earnings coming up on Wednesday for GameStop, and that's going to be great to take to get into Wednesday evening. I imagine similar to what happened last time. Last time they had the earnings call, of course, we listened to it on the show, and it was cool. And we talked about how they had the new CEO, the attitudes of the CEO that was departing, the sort of plans that they were having and talking about at the time, and all of that good stuff that we wanted to hear. And I analysed that at the time. Pretty sure that we made some sort of kind of general statements about what we thought of things. And then the next sort of like 4 weeks, everybody then, or 4 weeks is maybe an exaggeration, but the next couple of weeks anyway, then everybody else misinterpreted everything, talked a load of rubbish, and eventually circled back round after doing all of their analysis on it for ages to talking about the things that we talked about as we were listening to it at the time. Interesting stuff. So I'm looking forward to listening to that again, or next time, seeing what they have to say. It'll be interesting, and to hear their future plans. Lepton, we're living in Game of Thrones. Rocky Outcrop is Jon Snow. Winter is Moas. Ambo is a dragon. I have to learn to tame the Ambo. Sanjo's here, is he? Sanjo Kojak, listening in while driving here. All right, Scott, man. So yeah, as you know, Scott, for instance, will know, being Sanjo. No, I just doxed him. My friend in the real world. I know this guy in real life. This is real life for all of us anyway, you know. Anyway, but I know this guy physically, if you want to say, and yeah, friends for over the last couple of decades. You know, excellent guy, really wonderful chap. He'll know all about how I like Game of Thrones, of course, as well. Wheel of Time. Game of Thrones, I introduced all of my friends to reading that book back in the day. Don't think Scott's not into any of this crap, right? He's not into it. But he'll give it a shot, eh? He'll give it a shot. He's the only one in the audience, really, that would feel that would you know, just because I said it. If anybody else wants to give the TV show a shot, then go ahead. Anyway, I've also got another channel on YouTube. It's called Rocky Outcrop on What, and I might make reaction videos to all of the episodes that they put out. Okay, right? I might do that. It's my thing. Okay. So yeah, so here we have it. So that's that one. We talked about it already, and we talked about how we've got the earnings call coming up. Wow, won't that be great? Super exciting stuff. Oh, we're on that chart. So we'll also be taking a look at this now. Last time when the earnings call came out, it was remember it was more about the stuff around the actual earnings themselves. This time maybe a little bit more focused on the earnings, maybe, but also really looking forward to seeing. To hearing the guys with their hands on the steering wheel tell us tell us what's going on in the company as Sanjo Kojak comes in there with "Where are more Durgans?" We used to love talking about the old Durgans. We used to call Game of Thrones Durgans, the Durgan show. Where are my Durgans? Give me back my Durgans! Right. Anyway, here's AMC. And it's not got an earnings call on Wednesday. Is it Wednesday the earnings call's on? Tuesday? No, Thursday. Must be Thursday the 9th. I think it's the 9th of GME. Or is it the 8th? Ooh, Wednesday the 8th. Yes. Wednesday the 8th. Tomorrow evening after market close. Right? I think that's when it'll be. Yeah, so here with regards to AMC, still 5-minute time frame. You know, I'm just keeping things pretty tight on it. It's dropped down a 5 cents or so since we were chatting about it there before the Game of Thrones bit. Looking here and asking questions about this potential for it to retrace back up the way. Now I've got a Fibonacci that I drew on the charts before. It's obviously positioned wrongly. Let me just line that up there. And now we can see that that we're above the 236 on this Fibonacci. We're on the 5-minute time frame. We're above the 200 simple moving average, above the 50 simple moving average, but we're not above really, you know, any of the highs, the lower highs that we had on the way down here. There's the debate to be made about that being above 43, you know, being above 44, and where we finished on Friday and all that. And of course, we're above it with pre-market, so that's fine. The pre-market prices themselves are above those higher areas, so those are the ones that I'm looking to in the $45 region, and $45 is where the pre-market prices are just now. So if you're not watching right now and you're just listening like Scott is, what I'm looking at the minute is a chart which has got which has dropped down a bunch, then it came back up a bit, but not loads. Like you're looking like it came back up like a third of the amount that it dropped down. Then it went back down again to that low, and then it's come up so far, and it's not as high as it was before at that third-ish region of where it got up on its recovery. Is a bit below that, but the pre-market prices, you know, where it's trading in extended hours before the official kind of markets are open, is up above that area where the prices had gone up that third. And that's kind of what I'm talking about. That's the little kind of reflection, an inflection zone potential for us there, you know, and kind of thinking about how the day could start. That would obviously leave a gap on the charts, and that gap is going to be around about the size of $1. And this is a stock that costs $45, so that's our 2 and a bit % size gap, and that's enough travel of a stock in the first opening period of trading, you know, in terms of it to be like, whoa, this is there's movement, there's activity here, which can draw eyes as well to the stock and then increase that. Now, volatility is the lifeblood of traders. Let's hope that we get a green majority, let's hope that we get some green on the charts today that goes alongside some volume. So if the volume comes in to bring the prices back in to close out on any gaps that we've got, so if the prices do open up above that area we were talking about, where it's like a third of the retracement back up towards the high, so if they open up there, which they're going to, it looks like, and then retrace back down again, they go back, the prices then move down towards 44, so 44.14 actually, and close out that gap. If they do that and then there's a bit of volume with it and then it ends up being green, then cool, because that would then of course amplify the kind of accumulation distribution indicator, which I'm now bringing up on screen. Now of course you can't see this if you're not watching, but if you are watching, what you're looking at here is a thing oscillating up and down, going green when it's above the middle line and red when it's below it, and all that sort of stuff that you've seen on other sorts of oscillator doodads before. It's got a shaded area, you know, rather than just being a line going up and down like the RSI, it shades the area up to the 50%, and it gives it this sort of black white look across the charts as well, kind of like you know, that sort of old school tiling design there in the middle. And what we can see is that there's been kicking around in it around about, been saying kicking around far too much. It's going to start to become like a some sort of catchphrase of mine. I don't really want it to be. It's been in this area of, oh, acid was taken. Welcome to Early Supporter Plus. Thanks so much, buddy. That's really kind of you. Really appreciate doing the upgrade. Really fantastic. Thanks so much, Aaron. Good stuff. Good to see you. Thanks so much, mate. Excellent. So what we're looking at is this thing, and we want to see this green area expanding towards the top side, accumulating. That there's a good degree of kind of buying going along with the price is moving. You know, so what you could see here is if the prices were to move up, but there wasn't much volume at the time, then they wouldn't move up. So this green line wouldn't move up so rapidly, and wouldn't then, of course, be higher and pushing past the previous highs, which of course kind of goes together with this idea. Well, if the price is pushed up a bit and people bought it that much, then they pushed up a bit higher and they bought it that much, and then they pushed up a bit higher and they bought it less at that point, and then they tried to push it up and they bought it less, then it's kind of like smart money maybe starting to not be there alongside all of the other retail. That maybe smart money is getting out at a different time to you, and that any sort of momentum in the markets is just carried on through a lack of real buying activity. So I can give you that sort of insight. That's essentially what you're looking at. The way this thing is calculated, by the way, size, sort of the guts of the candle. You work out what the size the guts would be of the candle, or and then you times it by the volume you've got down below. If it's red, it's up. If it's green, it's down. Now the thing about it as well is that it's agnostic with regards to the previous day's candles and all that. So this thing has got some sort of funny elements about it with regards to if you see gaps, you know, or if you see a candle, or if you had a gap down and a green day, you might see the prices only return back to where they were, yet it looks like the accumulation has increased, and perhaps it has, and also perhaps you're getting sort of positivity while you're only really returning back to what was previously support and has now become resistance. So it pays to kind of be aware of the nuances with the indicator, just so that when you're looking at the chart and you see something happen, you can be aware of those little nuances. Like, so over here we saw the prices move up and there was a gap at the same time and the accumulation thing went up a bit. That coincides with everything just being normal. You'd overlook that sort of situation. But then there's other examples where we've got candles where they're positioned like here, where we had the candle and it moved up a whole bunch, and the prices moved up a bunch, but the well, actually, that actually worked out fairly well in terms of the accumulation, because it was a red candle here, pushed it. So I'm looking. Well, if you weren't looking at the charts, by the way, and I wanted a visual explanation or whatever, then what I'm doing is I'm looking at a candle which exists outside of the alignment of the normal sort of the whole red candle meets green candle meets red candle. Well, this candle was above them and in its own space, and it dropped back down the way. So while the price action itself, if you didn't color the candles at all, looks like it was going up, it was actually dropping during that period. And then of course, you're getting what could be confusing signals on indicator, on the accumulation distribution, given like just nuances on the charts. So yeah, great, excellent stuff. 5 past the hour. Damn, I went on for too long there. I was trying to bring us up to 2. Went to 5 past 2. So news. You snooze, you lose. So let's not snooze. Let's take a look at the news. Now I'm gonna risk it for a biscuit. Risking it for a biscuit. Don't say I don't ever do this. I haven't reviewed this yet. This was shared by somebody in the Discord. It's some article on Super Stonk. Which has been shared there in the DD news and DD section on the Discord. I've not read it, so this could be a minefield. Let's just take a look. It could be good. Could be fantastic. It's been posted by someone called HMHEMES or something. You probably all know who he is. I don't. 12.6 thousand upvotes. Seems like a lot, probably is. Not too sure. Think that probably does a good job. Probably put it onto the first page. Not too sure. Don't spend any time on this thing. Big changes coming that could affect OTC zombie stocks. Effective 28th. Oh, by the way, for anybody who's watching along, well, he doesn't spend any time on Superstonk. Therefore, he mustn't be a big believer in the MOAS. No, mate. I don't need to snort crayons to keep my hype going. It's all good, right? I'm already there. Don't worry about it. Anyway, right, effective September 28th, many OTC stocks will be moved to a private broker-dealer network called Premarket, and you, the retail investor and general public, will not have access to prices, data, or trading within this private market. Okay, just another private market so far. So OTC zombie stocks, yeah, OTC zombie stocks, right, they're already shit stocks. We were talking like Blockbuster and stuff like that. I'm trying to get as many eyes on this as possible. I haven't had much luck so far, and I keep seeing posts like, here, I'm helping you, pal. I'm helping you, him is. I haven't had much luck so far. Well, good luck. Keep seeing posts, blah, blah, blah. Did my own DD on this matter. It's can be found there. Ton of long dead OTC stocks. Look, it claims that shorts must cover or close by that date, for which I've found zero evidence. That's what he's talking about here. A ton of long dead OTC stocks have come back to life recently, and it has this person jacked. They believe that the price action is an indicator that they have been tied to GME. That's unusual. But I think there's some sneaky business in the works. Don't know why I said but there. Anyway, whatever. I'm not here to critique his use of English. But I think there's some sneaky business in the works, and efforts are being made to suppress information. As far as I can tell, these stocks could be moved off the OTC market and begin trading on the private broker-dealer network called the Premarket, and this could be happening in a few weeks. This market is by design not accessible to retail investors and general public. Yeah, absolutely. Why? Because the SEC has decided that certain OTC stocks are too dangerous for retail investors and must be protected from fraud and manipulation. Lol. Well, sure. Yeah, but I mean, these are companies which it's like saying to yourself, like, which is true. It's like saying I like driving fast cars and I'm a mechanic. And I'm a mechanic, so therefore I should be allowed to buy cars which have been previously written off and use them to race round tracks. Absolutely, you should be allowed to. You should indeed. Whereas I think by the same token, car dealerships selling cars to single mothers bringing their kids to school shouldn't be legally allowed to sell cars which have been chopped in half so that the back half of one car is soldered onto the front half of another car, because that could be dangerous. And therefore, it's why we have governments out there to look after our interests so that things happen. So, of course, you're going to see stuff like this happen. Lol is right, yeah, because we all feel like that mechanic. But, you don't want your gran buying Blockbuster shares because she thinks that they're going to be worth way more in 6 months' time, but just to take advantage of a play that's happening over the period of a week. For example, you don't really want that for your gran. You might want it for yourself, but you don't want it for your gran, and you don't want that for your neighbors, right? Anyway, we're wasting too much time on this thing probably so far. That's the problem with Reddit, isn't it? Too many words. A ton of long dead OTC stocks come back to like blah blah. Why? Lol. No longer retail crypto be able to see prices of securities moved out in the market, nor retail investors be able to engage trading. Okay, fine, right? Don't believe me. Here's the highlights of my DD. Sorry, that was the point you're making. If we reanimate OTC stocks get moved to this expert market, it will hide valuable data, as we'll no longer be able to see what's happening with the price, volume, etc. Right? Okay, sound. The website of the company operates the broker-dealer network. Okay, it already exists. The SEC filing itself, that's the primary source. That filing claims confirms the claims above, outlines what securities will be moved to private network, includes securities with outdated financial statements, including shell companies, as well as securities for companies that are undergoing Chapter 11 bankruptcy proceedings. Yeah. I mean, you do realize that companies that are undergoing Chapter 11 bankruptcy proceedings are not the sort of thing that you want to sell to somebody who's looking for financial security for a kid's college fund. As a general sort of like, how can we mitigate the risk for the consumer? What's the point in this article? Why did it get shared? Why has it got 12,000 upvotes? What am I missing here? I'm blind to something here. Of course, there's nuance and exceptions to the requirements that not every security will be moved. Trying to keep this brief. You've failed. If you want to know more, then just read this analysis by somebody else, which gives you an overview of the situation. It's lengthy and dense. It's informative. For the smooth-brained apes, casual lurkers reading this, that's right, okay, I'm a smooth-brained ape right now in this situation. My intention with this post is to manage your expectations by September 28th. For wrinkled brains reading this, please scrutinize my DT at the link at the top. I need more people to look into this, as I feel it's very important given the relevance of our OTC zombie stocks to the abusive... Okay, so I don't know the link, so here's your DD, right? So since you need to be on the in crowd, and that was a clique post for the clique, 12.6 thousand upvotes of people voting up something for some reason. Let's go and take out a look of this one so we can actually understand. Introducing expert market, right? Sound. The OTC's market group sexy dark pool. Why September 8th reporting requirement changes may be bad news for market transparency. Seen posts hitting this. Too long didn't read. Courtesy of markets, the group currently operates the expert market, distinct market tier for a small number of companies. However, September 28th, this market tier will expand to include a broader range of securities following assessment to get a handle of the situation. The original source company, a lengthy informative SEC filings, OG sauce, OTC market. Right, so just a second here. Just going to nip over to the Discord. Nip to the Discord, go to the news and DD section, scroll up to that post. Where's that post at? Duo Maxwell. Sorry, man. The more things change, the more they stay the same. That's the post. That's the thing. Good point. The more things change, the more they stay the same. Duo Maxwell, good point, man. Thanks for sharing. Click more, scroll down, delete message. That's right. Just going to remove that useless shite from our Discord. Cool. Excellent. That's that news section. We'll come back and look at some more news at the top of the next hour. Before we do that, let's acknowledge that it's 2:15. Check in with the chat. Maybe I'll scroll up, read something, and people will have explained to me what's going on. Thanks so much for that, Joe Maxwell, by the way. That was a good commentary on that DD. Just taken it out of the news and DD section because I don't see now that we've wasted 140 people's time with that one. We'll not waste anybody else's time with it. Frostcrest, the too long didn't read on the DD is that other companies shorted to death are still being maintained in a short basket alongside GME and have never had their shorts closed after delisting. Absolutely, right. Absolutely. I'm still confused as to what the actual point is, though. I'm sorry, man. That's all good, though. That's cool. So, yeah. I think the concern is that there will be no transparency. These can remain unclosed forever. Yeah. Yeah. This is DD Rocky. Normally, it's TA Rocky. Yeah. Thanks so much. MMAT looks sexy. Cool. Bad Mama Jamma coming back to reality. Thanks so much for that. Cheers, Bad Mama Jamma. Let's go take a look at something real. Let's go take a look at something real. Not going to say that that's not real. Just going to say that this is real. I'm not saying that the other thing isn't real because it is real. Rules exist. Stuff happens. Transparency, big problem. You know, this is what it comes down to. You know, there's an echo chamber in there, and echo chambers, you know, that's fine. But the response to that is, and no doubt somebody, if I'd ever made it down to the comments, would have said, too long didn't read, buy and hodl, right? That's what it would have been. That's the response. Everyone's like, I don't know, I'm hyped, but all I know is one thing, buy and hodl, right? That's what it is. Great, cool, excellent. Some more discovery by the general public as to the nature the lack of transparency when it comes to these sorts of companies. Well, you know, I mean, we know how shorting companies works, and we know why companies naked short. We know why these hedge funds, these short hedge funds, naked short companies to get them to go down to zero, so that they don't have to cover. They don't have to cover because it's gone now. That's why they do it. They don't have to cover. It's gone now. So the takeaway is that other smooth apes are simply learning how this works. Ah, right, cool. That's the takeaway. Smooth-brained apes are learning how... Sorry, I thought we were talking... I thought when I saw 12,000 upvotes on one of the world's most popular subreddits that's been talking about this topic extensively for 6 months, that about the premise of naked shorting, that the very, very, very initial basic first step into this thing would have been considered to be common knowledge. I'm sorry for talking about it as if it wasn't. You're saying you're a pro and that, and it's true. It's I do know how it works and that. But there's yeah, exactly. Yep, exactly. And thanks so much for that, Frostcrest. And you're right. There's the takeaways that other smooth-brained apes are simply learning how this works, but are scoped to GME only. You're a pro, and you know there are many sides to this, such as Grandma and Blockbuster. It's why you're confused. It's normal. That's right. Absolutely. This is the machinations of the markets. It's nice, you know. Pleased to meet you. I get that. People say first impressions count, but we know that that this movement that has literally millions of people in it all around the world who have read literally hundreds of thousands of pages of DD might get to a point many months into this thing where they need to be told what shorting stocks is and how it works. And that I struggle to understand that that's sometimes the way the world is. MMAT is at 560. Yeah, this is the 1 hour time frame. There's you know, these movements on here, right? Woomph down. Now, I'm just saying this is a stock that moves, right? This thing moves. It's a dancer. No, mate, Super Stonk is like Sept first, and many people graduate from Super Stonk to the TA brothers, and it just takes time for them to find us over here, hearts. Right, that's amazing. You know, I just want step one, yeah. So step one, that's the step one stuff. It's right quality. It's yeah. So Tracepawn coming in there and helping, you know, helping explain stuff there. That's properly. That's good. Is the whole point of Frostcrest just super chat $5? Thanks so much. It's more common the shorts would never buy back. It's the whole point of doing it that way. Yeah, it's the whole point of doing it that way. It's kind of, you know, welcome. Right, sorry, just bring up GME for a second. Hi friends, Eli 5 on GME. There's this thing in the world that's called naked shorting. When you naked short something, you're selling more shares than the thing that actually exists. You're thinking to yourself, how does that work? It's illegal, right? Yeah, it is illegal. How does it work? Doesn't really. Because if you ever had to buy back those shares, they just wouldn't exist, right? So what do you kind of need in that situation? What you need is for that company to just go away. That's what the hedge funds wanted to happen to GameStop. GameStop, however, had a really good core group of customers, shareholders, and people like, you know, the likes of Michael Burry. There I say it, the guy who took part in fucking the world back in the day in 2008 as he shat on the world with his Big Short. You've seen the movie, you know what it's all about. And he, you know, made a lot of money off of you losing your home back then, that guy did. Anyway, he is part of this thing on our side this time. And he's right, it was with his thing right into the board saying, do this better, do that better, etc. You've got the likes of Roaring Kitty, a famous YouTube celebrity who actually got in trouble a little bit with the government because he is, of course, a certified financial advisor and was given his own positions on the internet on YouTube, which breaks the rules of FINRA if you take a very negative, narrow, and slightly wrong view on what the rules are on FINRA, but it's part of the thing, and that's why there was that congressional hearing, and that's why he was brought in. Wait a minute, what am I doing here? Explaining the whole thing to people. Anyway, yeah, continuing on. No, this has gone off board, right? Sorry, that's useful information for everybody watching right now. Let me just make a quick Eli 5. I need to bring up the record button. This is too short a chart. Weekly. Didn't realize this Eli 5 was necessary. People ask for Eli 5s all the time. I had no idea this one was necessary. Let's just do this. What I was explaining before I stopped there was about how there's this problem with Roaring Kitty and that congressional hearing and all that sort of stuff, and it was just going into all the histrionics of the thing at that point. Now the thing about it is that people out there, the people who the types of really sort of, the types of people like Ruler Zod that exist in the world, who are able on the one hand to be really deeply involved in a community like the GameStop thing for so long, but then ultimately just still somehow remain completely clueless as to what's actually happening. That's a far bigger number than I'd actually known existed out there. So let's just do this real quick. An Eli 5 thing, right? Hi friends, Eli 5 on GameStop. You want to know what this thing is all about because you don't necessarily understand it yet. Well, we're here to do that right here, right now. My name's Rocky Outcrop. I'm a technical analyst. I'm professional at it. I've got a YouTube channel. I talk to people daily about loads of different things and understand the way that markets work. I'm also, fuck. That's not helpful to people either. It's not going to work. Right, 1 second. Back to the chart. Stop recording. See, I don't really know how this works because I need to fit into the Reddit mentality, right? So Reddit mentality, breathe. Wait, hold on a second. Breathe. All right. Hi friends. Want to know why hedges are fuck? Here we have it. This is your Eli 5 on GameStop. That's the GameStop chart. Look, it went way up. It's still way up. It's going higher. We're going to the moon, baby. But you don't know exactly what this whole thing with short and hedge funds, etc. is. Let's take a second to explain that, shall we? Because we need to know. Too long didn't read. Like I say, hedges are totally screwed on this one. But what is it? Another too long didn't read for you. When they short these companies, they expect to never actually have to cover. Let me just dive into this in a bit more detail, driving back over to the chart. So you can see when the prices were down here at the real lows, what the hedge funds were thinking was, if we put a bunch of shorts onto this company and it goes to zero, then it's gone. We don't need to actually buy those shares back, and we make all that money. We make all that money and it's all ours. And some smart guy in the office said at one point, well, hey, if we can make all that money shorting it 100% of the company and it goes to zero, what if, now, I know it sounds crazy, but what if we sold more than 100% of the shares, right? And then somebody else in the office says, that's illegal. Shh, shh, shh. Don't say that. What if I had permission from the government to sell shares that didn't exist yet? What if I had that permission from the government to sell shares that didn't exist yet, but were going to exist? It's just that I'll sell them to you now. So what if I use my job to sell you the shares that don't exist quite yet, but are going to exist in a minute? And then we just don't make them exist. We just don't actually do that second part. And they're, wait a minute, that is possible. That is possible. And it's not necessarily even fully illegal, especially if we don't get caught. This happened, ladies and gentlemen, not just once, not just twice, not just 3 times, but a lot. So many shares were sold here that they didn't have. That when the prices went up, let me just move myself over a wee bit here so I can do this. When the prices went up to here, right, that the companies needed to actually needed to buy these shares back, because the way that this works is that they owed people money at this point. And the more the prices went up, the more money they owed them. And they thought, well, we need to buy them here. We need to buy them. We need to buy them. And they went up, and that's when the Melvin thing happened and all that craziness happened, right? Now, if you don't know what I mean by that, is like a big company lost billions of dollars, essentially, right? And then they had to get Congress, then they need to do all these meetings, they need to talk about stuff, new laws, all this crap, right? And this was all off the back of this idea of them selling more shares than exist of a company so that you can short it and and bring it to zero and never have to buy them back. And a company found themselves having to buy it back. Now, what happened at the top here, though? Other companies had this idea. Let me just go back a second, right? We're in a boardroom again. Guys, what if we short this company to zero, right? And we sell 100% of the shares. That sounds interesting. We could make a lot of money about that, right? Now, don't panic, but I've got this other idea. What if we sell more than 100% of the company? But you can't do that. It's legal. Well, actually, I'm a market maker, right? And when somebody buys a share, and we know that somebody else is trying to sell a share, we need somebody in the middle to say, I've got that, I'll help you, I make markets, right? But what I can actually do in this situation is keep one hand behind my back and just go, there you go. And we can just sell these things to other people. And then in a wee while come around, they'll say, 3 days will go by and they'll say, right, so it's time for me to give those shares to somebody. And I'll not have them. So what I'll just do instead is I'll just pretend that I have them by buying an option to buy the shares if they were to go down to that price down there. It's going to cost me nothing and stuff, right? So we'll just get this thing and we'll pretend. They did that again. Now, what happens typically in markets when things go up so high, and we've seen it so many times, just go check out the Volkswagen charts. They go way up, and then they come back all the way back down. What happened here? Friends? Right here. What happened? You happened. I happened. Everybody that's in my live chat right now happened. Everyone in my Discord happened. Millions of other people happened. Those congressional hearings they had, they told everybody all about it. Everybody knew. The prices dropped, went to $40. That was the low that they were only ever going to get to. Technical analysis said so as well. We all talked about it at the time. Me, my brother Tradespawn, we talked about it at the time. And then the prices went on up. And where are we now? We're still in it. We're still in it. And you know what the thing is? All the people that are against us that were shorting it in these points, they're still in it too. And they're looking and they're like, this is bad. And you know what? Every time that we get an opportunity like something like this means that it's more and more of those moments in offices where somebody comes along and says, do you know what, guys? I could short this. And you know who those people are? They're the same types of people as Michael Burry back whenever the housing market crashed in 2008. They're the same people. They're the same despicable people. And you know whenever you're watching that movie and it's like, oh, look, this trade might go against us. And like, no, stick with it. That's what they're going through. This to them is their big short. And you know what? This time, it's not going to happen. That's why we're going to the moon. All it takes is for retail people to buy these shares and hold on to them. That's not financial advice. That's just explaining the mechanics of this thing. For this to happen, that's all that needs to happen. I've bought some shares. I know some other people in retail who've also bought some shares. This thing is on. Oh, if you could share this video with your friends, that would probably be handy. Stick it on Reddit, whatever. See ya. And Rocky Outcrop, by the way, on YouTube. That's me. Right. Do I post that shite or not? I don't know. People need to hear it, but there you have it. So cool. Right. Markets open. Right. Markets are opening up. Excellent. Let's get ready to rumble. Yeah. New week coming in right here, right now. Rocky Outcrop, all Outcropticians, all my favorite colors, my sisters and my brothers, all tuned in, all at once to take a look at the markets opening up. The current price of GME Premarket is 204.86, 205.19, 206. It just moved 3 times in the space of that 1 sentence, and bang, we're open. 205.87, 206.39, jumping around in there on the weekly chart, by the way, just to remind everybody that today, Tuesday, is the start of a new week. As you can see here, that's a new fresh-faced candle, all just fresh in the world, little baby. Wah, 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 wah. New candle opening up over here, $204.50. Not too bad when you think about it. Not too bad when you think about it. Thanks so much, Frostcrest. That's good to know. Over here, you can see that we're kicking about in at the $205.60 price as well. But do we have a gap? I'm just kicking down here to try and see if we've got one. Was it an absolute insta fill on this thing? The 15-minute time frame still looks like we just got a tiny bit of a gap. Yeah, we do have a tiny bit of a gap here in the 5-minute time frame. Had to go looking for that one though, didn't I? Different story perhaps though. Over on the AMC charts over here, AMC, whoops, that's the wrong one. AMC, I didn't mean to go to MC. Is that Moelis and Company? I thought it was Motorcycle Club. We're up here. Whoa, it's gone up 45.63. Well, tell you what, now that's a bigger, more visibler gap on the charts. This is it, the start of the trading day. Everything so far on AMC really positive. Are we going to be able to maintain this? Is this going to be the start of something good? Now, for me personally, we've walked this story before. We know what tends to happen. What tends to happen is you're going to experience, at least normally, a retest of that gap area. But this is just the beginning. This is only the very, very start. We've only been open for 5 minutes. The current activity in AMC is momentum trading towards the top side. This is going to often be followed up with stops trailing up behind you and, trying to make sure that the capital is being exploited with the maximum exploitation of that, with the minimum risk exposure, often requiring people to follow up their trades with higher up stop losses, trailing stops, etc., and creating increased volatility there, along with that momentum trading first thing in the morning. 45.91, kicking along very nicely. Just want to check out MMAT right now as well to see where we are. 548, no gaps over there on that one. AHT, Ashford Hospitality Trust, a company we've been talking about quite a bit, managing so far today to really actually kick off the right way, filling in the gap and then continuing on up past that point. Excellent, good to see it. Keep up the good work, my friend. AHT. Over here on the AMAT chart, you see we ran up towards 137, dropping back down the way, got a bit of a gap over here. Will we fill it in or not? Well, like even in these situations, they do tend to get filled in. Looking at this gap over here at the first second of September, when we had the opening prices of the market shooting up to 134, having closed the previous day at 133.35, and then they had that gap. Now it did take a wee while. It took the entire day's trading plus actually a day's trade, whatever, took a day's trading to get back down to there, and then that was filled in eventually. So something to be aware of right here. And it's not like we need to base our entire trading around gaps at all whatsoever. But that's something to be bearing in mind when we're looking at the chart. So let's see how our friend GME is getting on over here. Right, GME, here we have it. So by the way, that was the thing. I'm not sure if that clip is good or not, right? I'm not too sure, because I didn't cover the thing which was really being addressed in that article, which is that they don't have to buy the stocks back, with enough kind of clarity over that sentence to make it so that everybody else reading that article will be like, why are you talking about this so now, But then again, I've got different expectations. I thought that everybody had read two things. I thought everybody had read Atobit's House of Cards DDs, and I thought that the House of Cards DDs explained rehypothecation of shorts of shares and the systemic risk in markets. I was informed later on that SDD actually isn't as what I thought it was, but I've got so much kind of, for whatever reason, respect for ATOBIT that I decided not to actually follow up and read with it, because it was a sort of never meet your heroes thing. I just don't want to see, if it's not going to be really, really great and impress me, I don't want to read it at all, because I've read other comments he's put out there and I've been fairly happy to see his general sort of seeming integrity, etc. with that. So I didn't want to meet your hero style in that sense. So I didn't bother reading it. Not that he's a hero of mine at all, to be honest with you. But I thought that that's what it was about. So I've got massive misconceptions. I thought I thought Super Stonk existed there to help educate people about these things, you know, and that they were doing an effective job of it. I thought that that's what that community does. It evidently, you know, my expectations, right, too high, whatever. GME has now tested that 200 simple here on the 5-minute time frame. Now, if it were to drop back down and test that 50 again, you'd be looking to try and have that fill in that gap, would you not? We've come up here, and instead of like, you know, instead of necessarily wanting to fill in that gap, I'm happy enough if it remains on the charts. It's just that we see these things happening all the time. Like, you know, like I talk about, here's another 5-minute gap. It's not exactly huge. Now, I just don't think that this gap in and of itself was the pressure that made it, you know, come back down to fill in that thing. It's just that in terms of like statistically looking at them, you know, in terms of the chances of them getting filled in, etc. It's just so high, even if it's after the fact. So, you know, let's just look back down the way and see where the last 5-minute gap was that didn't get filled in. That was a part of a trending move, and not so sure where it was. It's not jumping out at me anyway. We're back in August. That one was as well. Really, it's kind of, to find these things, it's fairly easy in terms of like just where you would put your eyes, because you're looking towards the prices where the, you know, you can see over here the prices drop back down to that point, and that there wouldn't look to be many gaps in there, etc. So you just have to look towards the lows, and was there a gap in at those lows, you know? So it's not hard to find them. It might have missed potentially something that had a gap that had been gapped over, but it's highly unlikely. So you can see here anyway that essentially, now it's a downtrend. So now I'm looking at the highs. Do you see how this worked before? As well, like this was kind of trending up the way, so I was looking at the lows. Now, as it happens, this is kind of educational in a sense for people when it comes to understanding highs and lows in markets. Now I'm looking at the highs for if there's any gaps that haven't been filled in. And here's an example of one during trend and price action that's in at that 177 price point, 177.77, a number that we're all too familiar with here on the channel. And obviously that did get filled in here, but it took a very, 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 very long time. And it was during this point here. And you can see that the 177 price point, where is it? Here was yet again also like 176, 177, whatever, right in close to that area. It was there's 176, 177, right? There was a degree of inflection here as we pulled back from it, and then when we went up through past that area again the second time, really did push on through that area as it happens. So that was interesting. Anyway, where we are right now is asking the question about whether or not that tiny little just wee little gap there would get filled in or not. That's essentially all we're doing. The opening range so far in the first 8 minutes of price action has really just positioned us between these two moving averages. In terms of like the bigger time frame stuff, you know, you can see we've clearly filled in the gap on the 1 hour time frame. These other gaps that existed on the 5-minute time frame I pointed out that got filled in also existed on the bigger time frames. So there's a question of which gaps existed on the 5-minute time frames that had been left on there unfilled was what I was looking for, which are just small, and there's very, very few of them. But that idea being that, you know, the bigger time frame ones are more obvious, right, and all that. So anyway, we've not got one here, so could we actually just leave that on there? Well, we could, and I wouldn't cry into my cornflakes about it, that's for sure. Looking at the oscillators down below as well, we've got the RSI just moving up past the neutral line. It's got a sort of slight sort of inverted head and shoulders look to the RSI over here at that neutral line there. So it'd be nice to see it get the movement, you know, of the equivalent sort of 15 movement. It would take us up towards the edge of the bullish control zone, obviously. Looking over here on the DMI, we've got a cross that just came in. Still 1 hour time frame, not like massive stuff, but bigger, much bigger than 5 minutes. Certainly give you a better idea of the general momentum in the markets. As you can see here, the stochastics having crossed over, looking in a nice movement. It's obviously nice when you get movements like this in the stochastics, you know. And there can be times when it's confusing like this, but it still mostly moves in that one direction. So that's what we're looking for. This chunk just here where we tried to do it and failed has led to us now trying again, and we're at a zone where we're superseding our previous high in the stochastics just here. So looking you know, decent for the kind of, generally speaking, the looking decent, generally speaking, for the turnaround that could last you for, you know, a day or two, you know, like, or whatever. Could last a day or two, could just last a day, could just turn around, whatever. But if we, so far, okay, so like that's decent. Other things to note now that we've got the drawings all back up on the charts for us to see is that we're obviously now crushing that 236 region. The price point that we're at now is at that resistance, etc. So we've done both of our targets so far. So that's why I'm putting so much kind of emphasis on the story of the 5 minute tiny little gap in there, because it's the only thing which is like the Achilles heel, if you like, on the analysis that we did pre-market, etc. with this thing. It's the only thing, you know, we talked about 236, the 236, we talked about the 209 price point, etc. Come up, we've tested that, we're retracing now. Without that 5 minute gap on the charts, you're kind of seeing it come down to 236 and thinking, I want that top rate support, good chance of it. Seeing it with that on there, you're thinking to yourself, a little bit more risk of that not working. It kind of adds to your risk assessment. And that's where we are with that one. Let's see how AMC is getting on now as we hit 42 minutes after the hour. Still absolutely flying here. Pushed on past that 618 Fibonacci retracement point, as you can see there. This is the linear chart as it happens. The Fibonacci drawn in from that previous high just over here on the 1st of September, down to the low that we experienced on the 2nd of September, up to the and we're now at the 786 of that thing. What's that song? I saw 3 ships go sailing by, go sailing by. Saw 3 ships go sailing by. Wait a minute. I saw 3 ships go sailing by. Oh, Christmas Day. No, but September. December? No. Was it a different nursery song? Different Christmas carol. It is a Christmas carol. It's a Christmas carol from and it's come sailing in. Traditional and popular Christmas carol and folk song from England, listed as number 700 in the Round Folk Song Index. Number 700 is really, you know, well done, getting into the 700th best folk song position there. Earliest printed version of I Saw 3 Ships is from the 17th century. The 1600s. Possibly from Derbyshire. That's where they say Derby. That's how they say it down there. And was also published by William Sandys in 1833. The song was probably traditionally known as I Sat on a Sunny Bank, and was particularly popular in Cornwall. Really? As I sat on a sunny bank, a sunny bank, a sunny bank, as I sat on a sunny bank on Christmas Day in the morning, I spied 3 ships come sailing by, come sailing by, come sailing by. I spied 3 ships come sailing by on, and then in my head, September the 1st in the morning. What the fuck is September the 1st got to do it? Why did I think that? Anyway, we made it up to the 886 on this thing. Wow, excellent, fantastic, 47 bucks, really doing well. Now, the issue with us for this is obviously, you know, the same chat with the gap, except it's staring us in the face as opposed to the GME chitter chatter with the gapper whappers. Now, it's not the only time we've had gaps on the chart. So again, you know, over here, this one left on there and looking like it could be, you know, one of those sorts of breakaway style gaps. This gap that was on there, that got filled in. That was at a 236 Fibonacci retracement point. This was at the 382. So again, you know, for us to fill that in, we had to come back down to 236. For us to fill this other gap, the previous gap, the 27th of August gap in here on the 1 hour AMC chart that I'm looking at just now, you'd have to come down to the to that $41 price point. That's why we were talking about $41 as being an area. Those, you know, not why actually, a couple of reasons why, but that's one of them. And that's where that 382 is. Now we're actually within a kind of an invalid Fibonacci retracement. You know, this Fibonacci here is invalid. I'll just make the whole thing red, you know, so it's not, you know, it's not functioning here. This one, it's not valid, right? Instead, we are between two other pivot points. Let's just call it between that one and this one instead. Just to it's the same effect at the top, the 886 on both of them, by the way. It's just a case of wanting to have the broader picture here. I've left the other one on red, even though it's visually confusing, I suppose, to people, just to kind of show the progression as we're looking through this chart here. And then we can see here that there's this green line here. That's the 50% Fibonacci retracement point, the 50% Fibonacci retracement point. That's between this high and this low. And that's the 27th of August. And where we find ourselves now is on the 3rd of September. This is the 1 hour chart. So if I look back the way, it's more than 26 periods. It's more than 26 periods going back the way. It's like 36 bars. So if I go up towards the 2 hour time frame, this is where I look silly. If I go up towards the 2 hour time frame and then I drop on the Ichimoku cloud, not too silly though, thankfully, then you can see that the baseline of this is coming in here at that 50% retrace area. So if we were to go down and fill in that gap, we'd be coming down towards that baseline. That's this pinky colored line. Baseline. Make it bright yellow for you to see. Maybe that's easier because I changed the colors. That's where that 50% area is. You know, that's where the Fibonacci 50% area is as well, between those 2 points. As well, so there's, you know, it's just that's great. So that's great. So we could find support in there. Sorry, that's what I meant by great. We could find support in there. There's other reasons for it as well. Just kind of just thinking about it from that, in terms of that amount of time frame. But how about, you know, we look over here at the Bollinger Bands. If we were to come in here on the 2 hour time frame, that's 2 hour time frame, the 1 hour time frame. Go back to the 1 hour again. Sorry, so I can make this point a bit clearer. Yeah, I kind of knew that this is the way that this would be. It's funny that, isn't it? I don't know. You can look forward in your own trade in future to enjoy being able to do things like look at the 2 hour time frame, see the 20 period simple moving averages in there, be wanting to try and make some sort of point to yourself about the risk of us coming in and filling in this gap, and know that on the 1 hour time frame that's where the baseline of the Bollinger Band is. And then also, incidentally, by the way, on the 2 hour time frame, you can see that we've come up towards the top end of the Bollinger Band. The 1 hour time frame, there's a 50% difference between 1 and 2, so it's different. On the 1 hour time frame, you can see that we have pushed outside of that Bollinger Band zone. So could we see a retracement back down to 45.78? Or something like that, wherever the next point this comes in, maybe $46 or something like that, just at least to try and test this on this time frame. I wonder. Now, in terms of like going outside of Bollinger Bands, etc., how often, and let's just make it so that we can see a bit more extreme examples of this thing. How often on the 4 hour, on the half an hour time frame, do we push outside the Bollinger Bands and then not find after your opening range is complete? In 11 minutes, the opening range, if you like, of the day's trading, by looking at the first half an hour's trading, will be complete. And it could be anticipated that maybe we spend some time trading within that opening range if we don't immediately see follow through. How often do we see follow through on the opening candle which pushes outside of the Bollinger Bands on this chart? That's the question that we want to answer. Let's remove some crap off of here. Is the point in why I'm asking that question clear to everybody? I hope so. And the drawings themselves. How often do we, in the opening range of price action, now to say that there couldn't be some sort of event that pushes us on higher is totally not true. We're actually at taking out this previous high right here, right now. So it's interesting. We'd also be doing that without divergence. So we could easily close out that half an hour there in 10 minutes, up there at a higher high. The next question, will we see follow through or not? That's what everybody wants to know. That's what you want to know. I mean, if you're in a trade right here, right now, right this second, you might want to know, should you take profit or not, etc. But if you're a trader and you're looking at a chart and you just opened it up, as could be the case for anybody, good morning to you if you are just joining us in there as well. It's of course it's half an hour after markets, or 20 minutes after markets have opened. We're looking at that opening range in the half an hour, and we're asking about whether or not you get that follow through after you've had a big move in the first half an hour of the day, and how that could maybe look. And we're asking that with regards to the AMC chart in the past, and how this has looked in the past, and how and what could happen. And there's an example of it over here on the 24th of August when we pushed outside of that zone. Now what did happen is we came in and we tested the next area of the Bollinger Band. So what we'll be doing here then is, as a rule, we can make up our rules, is that we'll be looking at where the Bollinger Band is, and where is it going to be? Where's the Bollinger Band going to be? Where's the next area? Here it is coming along here. Where's the next area of the Bollinger Band going to be? That's what we want to. That's what we want to find out at the first, as the first thing, right? Because we've seen that this has happened. So here's a strategy for you. You've seen this has happened. Let's strategize. We've moved outside of it. We're going to test the next area of the Bollinger Band. Whoops. This happened at a high, and a high, and a high, and it pushed past the previous high. This is happening at highs. Could it push past? It would be the same sort of mentality if we get that follow through. Big difference over here is that we've got a gap. What happened over here is there was a gap. What happened over here, by that I mean the 20th of August, as I look at the charts, there was a gap. But that gap was filled in before it went up the way. And it's kind of like, got that unfortunate gap below it. It does. Something to be aware of. Anyway, other instances where we pushed outside the Bollinger Bands, as a general note, here, the next candle followed up, big movement down to that Bollinger Band. So we're curious to see again where the Bollinger Band upper band level is going to be at. Going back the way, here's another example. We pushed right outside of that zone, red candle, came back down, immediately wanted to go back to a point of equilibrium, to use Scott Carney's terminology for this, even though we're not talking about harmonics over here. Clearly though, it needed to get back to a point of equilibrium though. You can see this going up the way. Whoa, fuck, back, so here was a gap that got filled in. We pushed outside of that, came back in again immediately after pushing outside. Now we came up here, but we didn't push outside of it. Came up to this one, didn't push outside of it. We did with a wick, but it came back down again. We came up here, we pushed outside it, closed outside of it, came back down the next period. Here, that's one of those candles, one of those. Let's say the accumulation distribution here. So you can see that you've got this big we've maybe turned things around, accumulation distribution, right? Oh, we've maybe turned things around. What do we see here though? We see a candle which is which existed as a gap down, but it opened up and it was a green candle at the end of it, giving you this idea that you've got more positivity following on from the previous candle's green candle, but that's not true. So there was red negative price action. The accumulation distribution indicator was getting lower because the volume, or getting back to zero, the basis point, because the volume was diminishing as these candles were not putting in bigger amounts. And then we flicked past the median line, and then we had this candle here which came in and did give us that girthy looking move on the accumulation distribution, but ultimately we were unable to do anything more than fill in the gap. And this here happened and let us fill in the gap that was on the charts, and then we slid back down the way. And this kind of rise up then in the accumulation distribution indicator looks somewhat anomalous in what is otherwise just a fairly regimented downward trend. Do you see what I'm saying here? This is education. Do you see what I'm saying? This is an otherwise fairly regimented downward trend. You know? What's it look like? I'll describe it to you. It looks like that. How describe it with your hands? Looks like that. Looks like that. Look at that. It's like every other one you've ever seen. What happened at this point here? Well, I'll just show you. We had this big movement up. What was it like before on the way down in the trend? Oh, it was just the normal stuff. This was consolidation. That was this period, the last time we had a big move. Consolidation, getting tighter in a triangle towards the end of that. Then we started trending down the way. Had a classic-y looking trend. Had this anomalous looking move inside the thingy. That's as a result of that candle. The expectation that could be really great got us up as high as the gap fill and no further. We pushed outside of the Bollinger Band. And that point when we filled in the gap, what did we do in the next candle? Came back in to test the Bollinger Bands. Again and again and again. So we've made this. Have we finished this out yet? No, we've got 5 minutes to go, so we'll come back and check on this one in a minute. Let's just see how GME is getting on. So that was education. What I just educated you about there was two things. And not something that I was talking about earlier on in the day. How anomalous price action on the accumulation distribution can lead to interesting dynamics as you look at the charts, and it's something to be worth being aware of. I knew that at some point we could find an example that was worth talking about. Left it and decided that we'd come back to it, at another point when inspiration struck. We also talked about moving outside of the Bollinger Bands and whether or not you would come in and retest it, how it could look if you're actually getting a movement up past your previous resistance, your previous market structure with your previous highs, how that could go. The Achilles heel of the situation with regards to that gap on the charts, which hasn't been filled, the knowledge that these gaps tend to be filled on the 1 hour time frame, even if it happens a couple of days later, etc. The combination of the fact that we have pushed right outside of the Bollinger Band, but not actually managed to, but we don't know where the next area of that's going to be at right yet. Why? Well, because essentially we can't be bothered doing the math to figure it out. But there you have it. And then, and we'll just check in on that in 5 minutes when it appears in the chart, 4 minutes. And we're back over at GME. So I think that's pretty good stuff, right? Oh my God, if I had a girlfriend and she sent me that, I would vomit on myself, said TradeSpawn. Wonder what that chat is. That's hilarious. I saw that at the corner of my eye. I'm not going to read back up and find out what that chat is, but that's funny that it's in there at all. GME gone red, and this candle pulled back down here, coming in and dancing around. Let's check in on that tiny little sliver of a gap that's left on the 5 minute time frame, and what would be happening if we were to go and fill it in. Well, we'd be taking out the median line of the Bollinger Band, of course, coming down here, and that would be looking for 202.82. Could 202.82 be the best price of the day for us? Well, 202.50 could easily be, 250 cents could be. For me personally, if we see the prices dropping down past 198.83, then it kind of sucks. We could be looking down at having trending downward price action. So might as well point this out by doing something like going at the 30-minute time frame and looking at this chunk of price action which is now dominating the entire screen, and say, what is it? Oops, what is that? And say that taking out that low obviously would be a downtrend. PFE 3 months, please. Looking to see gap fills $10 leaps. All right, sound nice one. Let's do that. Thanks for Bollinger Band explanation. Sorry, man, I forgot about your request there, Frostcrest. I did see it coming in. We've got a couple of minutes to go back and take a look at that thingy-majig there. Everybody knows the chat over there anyway. We've explained it pretty well. PSFE. What did you say? Month. 3 month. 3 months. Wow. I'm gonna just look at this is I'm gonna read back up and see your previous message, by the way, as well, because I saw you said something else and I'm sorry for ignoring it. There is looking to see if we can expect gap fills. Seem to be 2 of them. I have $10 leaps. Right. Bam 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 bam. Gap. Bam 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 bam. I'm just looking on the 4 hour time frame over the period of the last 3 months, essentially, is kind of what you're talking about over the period of the last thing. So yeah, so we're in September, August, July, June. Gap there filled. This is me on the 4 hour time frame. So wait, hide that. Wait a minute. What's going on over here? Right. Okay. 618. Oh yeah, man. That gap is guaranteed to be filled. Not guaranteed. Sorry, I'm not a financial advisor. Nothing that I say online is financial advice, including even like the sort of like brain farts that happened just there, where I use language which sounds like the sort of thing that could end up getting sued over. No, 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 no. However, I would say that what we're doing here on the channel is we're developing an indicator which certainly looks at this sort of lack of volatility and the lack of the strength of trend. Not the lack of volatility necessarily, but that's kind of what I was calling it. The lack of trend in price action, really, and that we can see here that what this does, and the prices do come up, and they at least test. Oh, it's not guaranteed to be filled. God, sorry, not guaranteed to be filled. So that's why it's important not to use that inflammatory language. Although probably will be. Because the gap came in here at the edge of that, and it's guaranteed to be tested. And well, we've spent the last amount of time coming up there to actually do that. I do think that it will be filled though. I do think so. Let me just look a bit more. We've got the positive strength of trend that's there in the DMI, not massive, but it's there, and it could take us up. It could take us towards that zone. Where are the rest of these 4-hour gaps at? Do. Oh, I have the Bollinger Bands on twice, do I? I didn't realize that. Am I being blind? Must be being blind. Oh, there's only a sliver left on that one. There's only really the one necessarily, but there is that potential for that gap up there. Obviously, to bring this down a bit, the 1 hour might see it a bit clearer. Yeah, you can see it a bit clearer now, I suppose, but it's still not much. Like the gap there on that is that what remains is the difference between these two rays. So there's that one. But it's there, and it's 20-cent gap or a 15-cent gap. It's 16-cent gap. It's something. This one here, yeah, I do think that it could get filled. But will it get filled before it goes to the 618 golden pocket? I mean, it's going to get tested. Maybe it's close to saying that's already happened. Up here in the bullish control zone, that hidden bullish divergence there and that accumulation distribution as well. Real sold that off, but it didn't push the prices down much. Yeah, so you've got that. Not hidden bullish divergence. Sorry. Well, no, it's not got that. That doesn't count. It's bearish convergence is what that is. Yeah. The moment the price action is moved up towards this zone so far, and that's good. And it's what could conceivably happen is that it goes on and it fills in the gap straight away. That's totally conceivable. However, we're not seeing massive amounts of volume coming in for the good guys. This has a sort of wedge type look to it. If it gets the break towards the top side, so there's a fairly strong chance, probability wise, fairly strong chance. Then you're looking at coming up here and giving this a good test, $10 round number area. But this is negative price action over a long course of time, relatively, number of months. And I would still be kind of anticipating a potential move down the way. How are we doing in terms of right on the 236? Well, that changes things somewhat. Yeah, man. Logarithmic chart here showing us that we have come down to wait a minute. What's going on over here? Huh. That other gap. Wow. Huh. I forgot this is such a messed up chart. I forgot about this one. Right, there's a couple of real problems with this area. Being below this green line sucks balls. Being above it, very, very, very good. Being above the green line, filling in that gap makes me feel like we will fill in that other gap for sure. That's what it makes me feel like. Going between these 2 points here, the thing's all red. Yeah, it'd be somewhere up towards 50% at 618. It's not totally typical and normal. I forgot that this thing had come from all these massive, that this had this price action on it beforehand. I mean, you're looking at something like a gap up above where we've come back up to the area, and and then did this one get filled in? No, it didn't. Prices gapped right past it, right past everything up to the top, and left that as a gap on there. Yeah, I think that it will get filled. I think this will get filled, but I'm going to change my mind on that rapidly below this 236. You know, essentially on this one, because we're trending down, and by how far below the 236? Well, by taking out the 618 golden pocket, I guess would have to be my compromise on that one. Massive percentage moves on this one though. Really depends on how I was trading it. If trading this with options, etc., well then, you know, you're talking about things that become worthless immediately upon depending on where your strike price and everything is, where your premium is, etc. on it. How would I do it? I don't know necessarily. I want to see this get filled in. We've got the momentum at the minute taking us up towards that zone. It feels like it's likely, but at the same time, if it were to just pull down from here, then it would cascade down towards 717. So I reckon, you know, I'd have to watch out for that. And in terms of how I'd be trading this, I wouldn't be managing if I was getting into a trade right here, right now. I wouldn't be managing my risk at 723 from being up at 912. You know, I'd probably just be looking down to saying, well, if we take out all the 8s, 888, then I might be thinking that I'd hold off on that, just ditch it from where we are now, maybe. Yeah. Right. That one there. Sorry, didn't say guaranteed. Shouldn't have said guaranteed earlier on, but I do feel like that top one is looking pretty good. It's looking pretty good. I do think it'll get filled, but as soon as we get to 949, that flash is satisfied completely. At 949, it's satisfied at 949. We're at 913 at the minute. We've not got there yet. So from 949 on the way, that is the gap, you know, and that is the gap. So it's a question of how it handles it at the gap point. I think that there's a really good chance that it will get filled, but it's totally and absolutely, you know, any man's guess in terms of this thing. I really don't know what PaySafe have got going on the go either, because, like, you know, they're all over the place. There's like reasons in a sense for this type of crap to have happened. We also got earnings coming up. We had earnings just there as well that brought us down here, and they were as expected. Fine. And what were they last time when they jumped up? Anything at all? No, nothing at all. It's hard to know. Right. Hi Rocky, could you have a look at AEI? Yeah, AEI. Real quick, take a look at this in a second. Wait, what did I talk about? Wow, what the hell? I've got loads of writing here. Filling in the gap, says 236. Right, let's just read through this because I can't remember what I talked about here, but obviously I talked about quite a bit here. I don't even know what this is. What's it called? Allset eHome International Inc. Cool. Shorter term is more difficult to identify where to measure your fib from. If you're just measuring for the gap itself, here is how I would do that. Filling in lower gap will be a test of the 23.6% Fibonacci level. This is not predictive as much as it highlights the definite change in risk between the two gaps. If I wanted to study this in detail, I would look at that high around 760 on the 21st of June. But that area has a big gap at it too. Therefore, we consider measuring from Williams fractal high on 25th of June. Interesting point, Rocky. Or this one. Interesting point, Rocky. Yeah, interesting, Rocky. Thanks for that. Right. Anyway, we'll go back and take a look at GME and AMC soon. We've missed our news section for the top of the hour. I'll do that again. I'm way off schedule for today here. My timings are all wrong, but we'll do news when we do news. So right, great. Okay, so where are we? This is that one up there. That wouldn't work necessarily straight away in terms of thinking about things, whatever. That's that 236 right there at that area as well. So we're at the point 280 to 351 to 335. Is that possible? Totally is. How are we doing momentum wise? Bullish divergence at the lows here, great. Just taking out the neutral line here, great. Take out that area of 60 or so, and we've got a swing failure. Great. That's what you want to see. Failure sounds like a negative word, but it's what you're looking for. 339, 338. Great. Cool. Oh. Slight cross. The cross there was decent, wasn't it? Cool. Sorry, man. What did you ask me to take a look at? AEI. Well, I'm looking at it. Now I should take a speak at it. Yeah, this thing's AEI. Looking good, mate. Mike Fitzpatrick. Oh, cheers, Mike, man. That's appreciated, by the way. Thanks so much for the $9.99. Yeah, that's Mike. Looking good, man. 236. Decent opportunity here. Obviously, this could get rejected from this region. You know, the 236 is kicking about in just above our heads, almost no matter where you draw in the Fibonacci in terms of just this movement just here. This is the smaller term time frame stuff, and we're looking at something that's obviously been very negative, and it's got this 236 up above us, which is miles away relatively at $8.35 if you want to turn around this trend. This is the linear chart, by the way. I'm going to pop this onto the logarithmic soon, because that's where that test of the 236 that I spoke about. Where did I write that at? Anyway, wherever I said this would be a test of the 236, that's to do with the logarithmic chart. Just going to look at this in terms of linear just now as well. I appreciate that could be confusing to people that I'm doing that this week, but that's what I'm doing this week, is I'm looking between these two things a lot. And last week I was looking between them as well a lot. And the week before, I think maybe too, but I'm not too sure. So yeah, the 236 from up there, that from the high to the low takes us to that gap. Okay, so in terms of a linear type of movement, you're looking up towards $8.35 just to sort of take out that, or whatever it was, above $8 just to be able to take out just to be able to sort of be looking and saying, oh, we've got to the point where we could maybe be turning things around. Here I feel like this is a nice round area, real movement on there, and that there's this bullish divergence associated with it, which is quite nice to see on all of the oscillators. Now we have a little bit of an issue in the sense that stochastics, etc., come all the way up towards the top end of there, and typically you'd see things kind of turn around there, but we haven't actually broken into this oversold territory on the stochastics in such a long time. Just to give you an example of Bitcoin, when it's in movements which are like pushing here, as you can see, trending in this area up above spending a good deal of time up there, never doing any of this dropping down. You're like, oh, it could drop down from there, didn't. Oh, it could drop down from there, didn't. That type of thing. So that's what that could be the case over here with AHT if it were to actually try and get into the really bullish zone, and that would start to feel really bullish, at least on a short-term basis, if you were to take out that 330 area to be moving up past that high. It makes it more difficult to identify where to measure the fibs from, indeed, and all that sort of stuff, because of the gaps with this thing. And where did I say about the thingy area has a good gap at it too? Oh, it was this one over here. The filling in the lower gap will be tested at 23.6 fib level. It's not predictive as much as it highlights the definite change in risk between the two gaps. So this other gap, the other gap that's higher up, so looking to get this one filled in first off. Wow, this has worked out so far. It's been a great trade. So from that low up to here, we're already up 57%. Fucking hell, Mike. What do you want again from me? Even just the idea of it's like, can we fill in those gaps? And that is like, yeah, man, we can do it, I guess. It's the same with the one, same with you with Frostcrest, man. Is we can fill in those gaps, but getting up to this point here has been a big movement up the way on this chart. Made me laugh for a second. So yeah. Yeah, we could still go on and do it. I don't know. I'm spending too long talking about that one. I want to go back to GME. Thanks so much for your donation, Mike. I didn't realize that you're asking me about a stock that you're already up, potentially 56% on anyway. You know, the equivalent of GME going up from 200 to 300 and being like, can we still push higher? I mean, of course we can, and it's not the equivalent at all in terms of where the previous trend had been, etc., etc. But yeah. What did I want to look at here? 30-minute time frame. Was it this one or was it AMC I wanted to take a look at? Not too sure. Back on the logarithmic chart as it happens. Here, linear log's not going to change things dramatically. People often ask about linear log dynamics. You can see that there's a Fibonacci that's drawn on a bigger time scale. It's got a line up there. That's a 50% line at 223. If I then flick it to linear, it's actually the 382 line that's at 221. It changes things dramatically on the bigger scale across bigger movements. On smaller movements, it doesn't change things dramatically. You'll notice then that people then that trade things so frequently, if they only use the linear chart, it means that they're also the type of person probably that never has any more than, for instance here, the 30-minute time frame, any more than 5 days of price action on their chart at any given time. You know, which means that they don't notice the difference. Like they're like, oh, what's the difference? I don't notice the difference. Whereas if they ever had anything more than 5 days of time on their chart any time and they hit that button, they'd be like, oh, there's a significant difference in those two charts. So it's an interesting little dynamic there. Something that obviously I notice when somebody says to me, well, what's the difference between the two? It's like, I now know that when you're trading on certain time frames, you don't have very much history in there. It was great. I got in early just wondering about managing risk. Thanks, Rocky. You're the best. You're the best, Mike. You just did that trade. You're the one that did the trade, man. You're the one that found the stock. You're the one that looked at it, was interested in it. You took the risk. You did it. You're the best, man. You're the best. You're the rock that rocks my world. I'm just here benefiting from your company. So thanks so much. Now the managing your risk on that one is a big dealio for you. There's a gap down here below us here, 30-minute time frame. Let's go to something like 4-hour time frame. Gap down here below us. So to have come up and tested the 236 on the linear scale, come back down and fill in this gap, it's totally conceivable. It's a big enough movement from where we are to there, here and there. If you're trading this, see this. I don't like giving out any sort of advice. See if you give it financial advice, then you're also actually giving out tax advice, right? For instance, I know that an American trading this, if they wanted to manage their risk by closing out their trade at 240 or something like that, or 237, because they'll be taking out this previous little sort of wick area, and then to get back into it again if it closed this gap and then found momentum at sort of 220 to then carry it on up the way, and then think to themselves, well, I'll sell it at 237 all over again, just for trading's sake, just to be trading, is 3 transactions and 3 areas of tax for you in the United States. And it's like, so if I were to advise somebody to do that, then I'm advising them on the tax thing as well. It's a total massive hornet's nest. That's why I don't go into any of that sort of thing. But in terms of managing your risk, it is a good question. And like, I should have maybe have paid more attention in the immediacy of you asking me, considering that the prices are up at 260 and they're now at 246. And I was looking at this from the broader term perspective as to whether or not we can fill in that gap. We've made our way into that gap already by virtue of being above 233, doing really, really, really well. We'd like to see us go on and continue to fill that out. I don't like this gap being down here in the 30-minute time frame, but I can mitigate that fact somewhat by pointing out eventually, it's on the 4-hour time frame as well, eventually that when you get to the daily, or the time frames which include the day, the 24-hour time frame, the daily, anything above 4 essentially, anything above 6, 8 and above essentially, you can see that we don't have that gap, and it would be great to go on and fill this one in without even considering what happens in the past with other implications in the past. So that would be good. That would be good. We could leave that on there forever. We totally could. Blah blah blah. There's a massive risk of us not doing that, and that's worth pointing out. Given the where we're at right now with this thing, it was AMC that I wanted to take a look at, though. I believe, was it? I had some sort of point I was trying to make, and I've now forgotten what it was. What time is it? 3:20. Supposed to be tuning out in 10 minutes. Time flies when you're having fun, huh? So here we have it. AMC. There was something I was supposed to be saying about this one or the other one, but completely forgotten. I don't know. I didn't know. Due a £2,000 tax-free allowance for dividend income, around 60% of people with dividend income outside of ISAs would not be affected, the government said. Oh, there's UK tax news, is there? Or something like that. Income tax especially. We don't work for the tax man. Taxes theft. Dan Ernst, Strayspawn, I found how-to for using Stream Elements in OBS. I'll get the link to you. It may be helpful. Not sure, but I'll share. You know, unlikely, but really appreciated the help. I'll just say on behalf of Jamie. Oh, Jamie said he's probably read it or whatever, but thanks, appreciate the help. Look at that, like minds think alike. So yeah, great stuff. FU money. You've been at this a hot minute today. It's been a hot minute today already. I started a little bit later though. This is what's kind of thrown off my time senses. So something happened. I don't know what it was. I've got no idea, but there's some sort of point. Oh, Bollinger Bands. Bollinger Bands. Yeah. And it was AMC. AMC. Dynamite. AMC. Out of sight. Yeah. Where is this? Where's this effing thing I'm looking for? Which Bollinger Band is that? Got a different layout and the style. Yeah, keep the yellow line on for the funsies. Where's my line? We're supposed to have had this ages ago. Oh, it was a half-hour chart. Right. So we've not come back down and touched that line yet. That's 46.23 and we're at 47.10. So this is just a little tidbit for people, right? We've got 9 minutes left in this half an hour and we've not touched that. Interesting, isn't it? It's interesting. Let's just look back the way and see how many times we've had a gap outside of the Bollinger Band on the half-hour time frame, because this is extremely interesting to see. This is the sort of thing, by the way, that people tune in for on the channel. Yes, I know there are other channels out there on YouTube that do things very differently to myself. What people are tuning in for here on the channel: unique, high-quality, educational content, gives you a skill for life, creates self-reliance, makes you resilient, increases your confidence, will make you a more outgoing and relaxed person, reduces your anxiety, provides a community for you to be a part of an actual, an actual body of people who do genuinely care about each other. It's actually life-giving and positive, and that's what you get out of it. That's why you're here, by the way. But also because of this unique education angle that we do on the channel all the time, which is pretty neat. Because we're watching this live, right? There's nothing more amazing and real than watching something live. Have you been looking at the Bollinger Bands that I've been scrolling back the way? I've certainly not seen any where we've had a gap that's existed outside of them. I mean, you could make a debate. You could maybe make the debate for that 1 or 2 pixels that exist between that wick and that part of the Bollinger Band right there. So there's that debate to be had. Still moving back the way though, bearing in mind that we're now back in June. Looking at this price action, this is extremely volatile price action, of course. So, could we get one back here in these highs in June? Could we get one? Still looking. That wick there and that purple candle. Might not be able to see it so well for you, so make it wider. Wicks there, bringing us back into the Bollinger Bands. Bang us back in. Whoa. Okay, over here we've got a gap there. So this is the last time it happened here. Was in June, 2nd of June 21. Wick did come quite close. It's not so much as an isolated candle as that other one. So obviously isolated. Here we have one a bit obviously isolated. You can see that we came back into it, trending towards the top side though, when the sideways price action met the basis line and we pushed up again, but moving decently. Gap just before we did that as well. So like conditions, not looking at fractals again, not looking for history to repeat itself, looking at conditions and asking questions about it. So where are we now then? Where are we now? And we're doing this, which is unusual. It's unusual for us to be doing this. So the next Bollinger Band point is obviously going to go boink up here or something like that. We could have a retest of this area, go over and then continue. That would be amazing with a gap left on there. That type of mentality. for us to happen. I'm not going to like overanalyze the thing, just kind of talking about this specifically, the region where we have clear air between us and the Bollinger Band as we're putting in a green candle. Okay, as we're putting in a green candle. Other examples of this in the past were hard to find in general. It's hard to find many instances of you existing outside the Bollinger Bands and not pulling back down the way. Then for you to find examples of you existing outside the Bollinger Bands and not having a red candle, at least when you're above the top side, or a green candle if you're on the downside. And examples of you being outside the Bollinger Bands and like this sort of thing and going on up the way, like that's interesting and whatever. But touching the Bollinger Bands all along the way just tends to be the case. It's not. There's no rule about any of this. There's no rule. It's not something. But then we have a candle over here. Came back down very close to it. It was a green. It was a red candle though. You know, red one. So again, in and of itself, an unusual situation to be in. Outside the Bollinger Band here, this little example, little doji candle on there. Green candle. Doji is green though. And that sideways. Can we see any examples of where we get actual follow through outside of the bands? Actual follow through outside of the bands here, but then we're basically touching it at open. So not here. How long have we got left? Another 4 minutes or so before that half hour closes. So plenty of time to do the research on this one. Red candle touching the Bollinger Bands though. Green candle touch the Bollinger Bands. Let's keep looking. We've got one sort of example so far. Green, right, here we go. Red candle outside, kind of touching it though, kind of just right next to it. Red candle outside of it, bit of movement down the way, outside of it, didn't get the follow through thereafter, came back, moved sideways towards the Bollinger Band before getting continuation there. So there's an interesting sort of way that works. Green candle followed by a red candle, so doesn't count. In terms of, you know, it went next to the line again anyway as well. So still looking back the way, we've made it back to March. Nope, not seeing any there. Nope. Nope. Here, nope. Nope. Here's another one. Red candle. Really close to the Bollinger Bands though, given the angle of this thing at the starting point on the way down. Interesting. Did move a fair chunk, 828 down to 690, and then the next candle took it all the way down to 595. Ultimately, then you know you've got your 822 down to $6 move there. If you'd have traded it, obviously from that point it was $10, and in fact the whole thing actually was a gap that came down as well, $12.87. Big movements down, big drop down in the price back there in February. Anyway, slightly unusual setup there for that one. Bearing in mind though, no, don't bear in mind anything about that one. Right. So can we be bothered with this any longer? Because this is the same on every chart you ever look at, by the way. Apart from real weird charts that have got no real logic to them, or just, I mean, a complete lack of liquidity is the logic there. Again, moving back towards the Bollinger Band. So it's just so unusual to see it not moving back towards the Bollinger Band, as I've pointed out and explored. This is an unusual candle. I think if before you didn't see that as being unusual, then maybe now you do. You see that as unusual. And we've got a minute and 20 seconds left or something like that until I'm supposed to be tuning out, and until the until whatever. So until I'm supposed to be tuning out, until this half hour candle closes. And that's that. So I didn't actually take a look at cryptocurrencies today. I might take a look just real briefly before tuning out. I don't know. It goes to show you that I've come to rely on the amount of time that I'm supposed to have on the charts. I've come to rely on the amount of time that I schedule for this sort of show normally. So wouldn't it be unusual in this situation to see further follow through, which existed in the same way outside of the Bollinger Bands at this point, just here. Be highly unusual. Done just enough to avoid the divergence on that, not necessarily. Now the thing about this is, and let's be clear about it, 5-minute time frame, we're back inside the Bollinger Bands. But the formation here, green candle, red, touch the Bollinger Band, green pushed up, touch the Bollinger Band, touch the Bollinger Band, that all applies. 1 hour time frame, right? This unusual price action we've just finished that half hour is continuing as before. Right? This is why I'm pointing this out as being unusual. It's unusual, right? 30-minute time frame. In the end, because the Bollinger Band moved up, it does make it look like it came close to it. But see, this is the way that these things work, because the moving averages obviously determines the Bollinger Band, that pushes that up. So there we go. Like there's that looking like that. Will we see it come in and test it, touch it though? It needs to touch it, and it touches it during the time that it's active. Like, let's just kind of point this out as well, that when your new candle's on there, you've got your new bit, the Bollinger Band, and you know how far away you are from it. So we're not that far away from it. It's conceivable. Then you can go down and you can touch it, whatever, right? So we've got that idea on there. 1 hour time frame, that would be us moving down to 46.48. So there's a dollar movement on there. At a 30-minute time frame, you know, that would be us moving down to 46.92. There's a 36-cent movement on there. So it's kind of like, it's kind of the question of like what, you know, can happen when you're buying the tops at things. But it's like looking over here and seeing like movement up, big movement. It was so far. Buying that wick there on that time frame was a mistake, despite the fact that you could have then made profit on it. You could have bought it at 45.91 and sold it at 48.29 easily. But you know, you could have also bought it at 42 and made more than 10%, you know, etc. on that one. So then seeing a bit of a red candle coming in here now is not unusual. Seeing us coming down and touching the Bollinger Band is, you know, is to say that would be predictable is not true. Now the thing about it is, look at the way that this works is that the Bollinger Band is the moving average. So there's your moving average in the middle. The moving average is the 20-period moving average, and you've got standard deviation points above and below. So then when the new candle comes on, it could be up there or it could be down there, and it moves as the price moves, where your moving average is, which then affects where this is, which then affects its relationship to the candle before. So another point that's probably worth making out with would be that it'd be kind of unusual as well to see the prices cascade right back down here immediately to 45 during this period of time, right? Because what that would do is it would drag the moving average down just enough to make it so that this candle here did exist really far away from the Bollinger Band instead of being in any way close to it. So like you've got that kind of component there in terms of these moving averages. In terms of this moving average, essentially this is essentially a Bollinger Band discussion at any given time. It's simply a discussion of the price action in relationship to the 20-period moving average. All this does is describe how far away you are to the 20 moving average and what the likely zones are of movement back towards it. So this is unusual. This is a break of the Bollinger Bands towards the top side. This being our zone here would be of no real surprise to see if at some point in the not too distant future that this became well, it already is, that for us to go down and fill this in would be a 618 golden pocket retracement. So if that turned out to be a higher high, and this was the turnaround of this RSI just here, and then we were to see the stochastics having made it into this over spot territory were to turn around here, and if we were to see the DMI turn around at the 40 point at the time that the Bollinger Bands are right outside of the thing. So you can see here, like, what have we got? Green candle. So bullish, volume, bullish, moving up in the RSI, bullish, moving up, got the ADX positive as the thingy's up there, bullish. This is going into this territory that I typically call the extremely bullish zone. I don't like saying overbought. I say extremely bullish. It's all bullish, right? It's all bullish. Nevertheless, we're outside the Bollinger Band. We've got a turnaround just here. We're at the 40 line on the DMI. The markets are moving around and need to oscillate as they would do. The 618 is in here at the 20 period exponential moving or simple moving average, and to come in here and fill this in at some point would be normal, because it's a gap on here in the charts as well in the face of all of that. So is there anything more that I can do to explain the price action right now in any way? Like, more? Is it possible for me to do it anymore without going on to some other completely different school of thinking? Like, without introducing a new framework onto this thing? I doubt it. Ashley, good to see you. By the way, Ashley, you're struggling to get back into the Discord. Don't know why. Send me an email, outcroprocky@gmail.com, and I'll just send you a link back directly, and we can figure it out and get you in there, okay? So that there's no problem. I mean, that's probably the easiest way for me to send a message to you, given that when you're not on the Discord server, we're not able to message each other, blah 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 blah. So do that, or I could leave a link publicly on YouTube, but then somebody else will nab it. So yeah, Outcrop Rocky, not Rocky Outcrop, but outcroprocky@gmail.com. Andy, we the people need to reassert ourselves and regain control from all these criminals and genocidal maniacs. Totally. We totally do. We totally do. We totally do. All of this discussion here with regards to AMC on this time frame is just purely for people as if they were trading it. I know. I'm at the stage where I don't like preaching, so I don't preach really. It's weird. You think maybe I do. I don't like preaching about people, telling people what they need to do with their money. Certainly don't do financial advice. That includes, while I don't tell people where to buy and sell, I actually don't tell people not to buy and sell. I don't tell people that they're somehow like that I would say you've betrayed me by you choosing your own sovereign choices as a human being in the world. Don't actually do that, and don't guilt people or shame people for their trading decisions. I actually have a rule. It's an unspoken rule, but it's a rule everywhere around me, which is that you're not allowed to shame people for anything, and you're not allowed to shame people for their trading decisions. You're not allowed to shame people for trading decisions. So that's a rule around me, a hard, fast rule. I've banned people in the past from being near me who I actually thought were nice people. I had no problem with, purely because they'd shame somebody else for taking profit on something and that stuff like that. So I don't do that. So a rule here. Nevertheless, I diamond hand AMC. I don't trade this thing, right? I don't trade this thing at all. Really, just assign all of that under education, because that's all that is. And there's other things that I do trade, like this thing over here, AHT, for example. And then there's all this stuff that I trade. Bitcoin, USDT. See Bitcoin right now at 50,100. Let me just show you something that's funny and wee bit, not funny, it's unusual, not unusual, whatever. We'll be talking about this in terms of when we get back to doing our classes again. Not sure when the next one is. I don't want to, say anything about when the next one would be necessarily in advance. But we're talking about a shape on the charts recently. I put it in the Discord where I described a potential butterfly pattern here and said, we can discuss this. So I can draw on real quick as well. There's your high, there's your low, there's your high, there's your low, there's your like roughly there was the butterfly pattern, right? Now the butterfly pattern went on and it went past the zones at which Scott Carney would say that you'd to stop out at. He went past them. It had, in many ways, a terminal bar, I believe, in here. This bar here would have been a terminal bar, perhaps, for us, but it didn't quite do it. I think that might have been one. managing your risk then. But actually, you know, for me, I think the way that we talked about it last night, the way that I talked about it last night was that it could go up towards the 1-4 whatever it was. No, it was in about here somewhere, some other area. That would be where you'd be managing your risk at. It went beyond there and then came back and actually did, you know, then cascade down the way here. And I was thinking at the time, what's extending this up? So I went to the smaller term time frames last night. This is just a little story. This can build up to a story about me, right? Here we go. Because I lost $100 last night, and I can tell you about it. And I was looking at this zone for the PES, for the sort of the possible execution zone, the PRZ, if you like, on that sort of harmonic. But I mean, I was actually just kind of looking at this and wanted to kind of think about it in a number of different ways at the time, and didn't want to short it until such times that it actually looked like it was worth shorting. And I was thinking about this zone up here in this area, and I was looking at the divergences, the clear bearish divergences that there were on the charts at the time. Now, both of these flashes had been filled in immediately, I believe. No, in fact, and this flash here, which was due to be filled in, so I had this on the go here, right? So I knew my Rocky Outcrop indicator telling me that, oh no, it had been filled in. Sorry, no, it wasn't. So that was all right. Sorry, I was just looking at that. It had been filled in. Anyway, I was looking at this and I was looking at the charts. I didn't have the Bollinger Bands on, so I'll take that off because it confuses the story. And I was saying here in this region, I'm expecting a turnaround because of the divergences, Wenambo, because of several factors, right? Several factors. I anticipate a turnaround. Not, so whatever. This is a Fibonacci which is drawn in up to that high that I was looking at. So you can see here at the sort of 52,800 area-ish, I was looking for a turnaround. And I was saying to myself that if it doesn't turn around immediately here, then it will go on up to 53,050 and complete out my crab pattern that I've drawn in here. Okay? That's what this is a crab. It'll complete and it'll draw in this crab. So I'm looking at this chart. I'm looking at this chart and I'm trading it on a slightly different exchange. And I put in my stop loss, right? I put in a stop loss because I'm going to bed, right? And this is a leverage trade. And I don't like leverage trading, but I don't use high leverage. I don't use high leverage, but I'm still thinking to myself, I'm not waking up tomorrow and losing 3 times more than I would have otherwise have lost. I'd been doing a spot trade on this one. I'm not going to wake up and lose 3 times more. I'm happy to make 3 times more if things go my way. I'm happy enough to stop out on things, whatever, right? And so I'm taking a trade on this thing. And I'm thinking to myself, well, I could stick a stop loss in any of this region. But the truth about trading the crab is that if you're trading this crab, that you're looking for a Fibonacci retracement up here towards the sorry, not that. You're looking towards moving as high as the 1902. The 1902. This is where your hop, if you like, your what Carney formerly called stops, where your harmonic opportunity price is here on the crab pattern. Typical area to look to. Now, you would be hoping for it to turn around at this price, right? 53,026. So I'm looking at this and I'm thinking to myself last night, not that I typically trade harmonics in this way, right? Not that I typically trade harmonics in this way at all, but that because I don't typically trade harmonics like this, and also because I was looking at the charts like this, right? I was looking at the charts like this, and I was trying to and I drew this on for risk management, and I was like, well, if we don't turn around here at this point, we're probably going to kick on higher. So I had a trade then, and I put my stop loss at 52,000. Right. Okay. So I was thinking if the prices go up towards this area C, it'd be 53,000. So maybe you stop out there because that could be where things could turn around. We're talking about harmonics a lot recently, and I wanted to. Last night I wanted to short Bitcoin. I also wanted to manage the risk of my trade. I am also talking a lot about harmonics at the minute. I was looking at this area to short for reasons just in that area alone, but I could see that there was a potential of a harmonic pattern, and I drew it in. I thought to myself, that might be an area to use for a stop, just because it's like practicing harmonics on a trade that I would already be doing anyway. So what did I do? I looked at the areas and I thought to myself, well, here realistically, if you're looking up here, it could go on even higher, and that would be all within the region of that then turning around. I don't want to expose myself to the distances up beyond, 52,900 to 53,180 needlessly. I'll put my stop in at an area around about here. And I had it in here. I stuck it in initially. I just was like, whatever, 53,033. Because you know me. Or no, 53,053. Or 53,030. I don't know, but it was 53053. Something like that, right? As my stop loss. I was like, yeah, there you go. There's your number. And that's what I would have done, right? It felt right to me. Except as I typed it in on my trading app, I noticed that it was close to being around about $100 loss. Close, but not quite. And I was like, I had this feeling in me of that the prices weren't going to go any fucking higher than 52,000 or 59,000 and 52,900 and whatever. I knew that sensibly I should be stopping it at 53,000, but I've stuck my stop loss in there at 52,973, right? Because when looking at my phone and putting the thing in on my phone, which is where I was putting the order in on, rather than the website, I had my charts open like this. I was sat here and I was looking at it. I had my phone in my hand. I was looking at that. I was like, as I put the order in, doing everything, all the work on a big screen. And I know, and I worked out in my head that if I changed the number to 52,973, that my loss would be $100. It's not. This isn't me talking about the time I lost my leg, or anything. This is just $100. But this is me describing a trading situation to you and how you can make a mistake. And it's just a funny story, and I shared it in the Discord. And so that's the result of all that. So I'll just show you how it worked out though in terms. So I noticed when I typed in 53,000 that 52,973 that my stop then became that I lost $100, and I was like, ha ha. And I liked the experience, the emotional feedback that I got as soon as I hit that, that thing. That's what I put in as my trade, right? Despite other reasons out there existing for doing stuff that might have been more sensible. And then I can show you what happened as a result of that. Because as you can see here from the chart, right? From the chart, I shorted this at 53,800 or whatever, right? Shorted this at 53,800 and something, or 52,800 and something last night at 3 o'clock in the morning, right? Yeah, that's what happened. Anyway, and then I went to bed. And I was pretty happy, right? I had my profit taken line coming in here, in at around about 50,000, 50,000 and whatever. Down here, I had profit taken. I was going to take profit in here, right? It's going to be a great trade down to here. That's what it was going to be. I normally, by the way, I never talk about my own trading, and the only reason I'm talking about this one is because it's unusual situation. It's funny to talk about, right? So here's the result. Stop market. My stop got hit. Look at this. This is the exchange I was trading on. That's the number it went to. That's the high of the market, right? That's the high of the price. 52,973. That's it. Who bought Bitcoin last night at that time at that price? Who in the entire world bought it? Who bought it? Me. Just me. Me and one other person. Me and a robot that existed in the world. That a robot that had gone looking to push the prices to there or whatever for that reason. And as soon as my trade finished, as soon as my one finished, the markets then proceeded to drop down the way. And where I'd done my charting, very good to me, where I'd done my charting and where I'd looked at this for my levels at, I'd ended up putting my stop loss in there and here. That's where my stop loss price was. You can see that it's just the way that these things work out. It's not a big deal or anything. It's just that the reason this happened is because, and you could say that this is the complete sentence, right? And it's sickening because I didn't want to lose $100. I didn't want to lose $100. I didn't want to lose $100. I didn't want to lose more money than I've earned in the last few hours trying to help other people make money today, for example. I didn't want to lose more money last night on a trade than I've made and earned today working. I didn't want to. But what you could summarize the situation as saying is that I lost $100 last night because at one point in my head, essentially I said to myself, I want to lose $100. I would rather that this $100 thing looks nice. Not a big deal, obviously. That doesn't represent like the massive amounts of my trading account and blah 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 and whatever else. You know, it's just as an is what it is situation. I mean, you manage risk across time in order to because you manage risk across time, not in any individual isolated situation. It's just that when you do little things like that kind of fuck things up in your process, it can be a bit silly. And then as well, you can also kind of be screwed by the fates, you know, the next day when you notice that your stop loss price, filled price, 52,973, markets high on them, 52,973. The first thing you check in the morning when you wake up and look at your trading account just to see how did that trade go that you put on last night. And then that's what you see. And the first thing you remember is how you changed that to that number yourself because you'd already decided where you wanted your stop loss to be. But instead of losing $133 or whatever it would have been, you thought to yourself, oh, I'll lose instead of losing $113, I'll lose $100 on this one. Anyway, there you go. Nobody's infallible. Nobody's perfect. That's the chat. That's where we are. I'm Rocky Outcrop, and I'm a fairly transparent, honest guy. And I never, ever, 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 ever share my own trading and that with people. But there's an example anyway, you know, just a little example of a trade that I did. And it was, you know, interesting and all that. It was about the value of the thing was about a third of a Bitcoin. Right, sound. Thanks so much. I still have that stream. It's just unlisted. If you already have the link of your history, you can watch it and make good content there. I was drunk, so can't remember. Don't know what you're talking about. Obviously, it must have been when Jimmy was drunk the other day there. Janine, now you're at $5. Yeah, Janine. That wasn't the point. I wasn't saying it for that. Thank you so much. You're very, 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 very kind. You're very, very kind. I care about what I do, care about stuff, I care about money. I wasn't wanting to throw money away. That's all I was meaning there in that sense. I wasn't wanting to throw money away. And the equivalent of what does that money mean to me? Well, it's like this work here. But I don't do this work here for that money. I do this work here because that's your success means that much to me. So if you want to think about it that in that way, it's that I'm motivated, really motivated to help you with your success over that much money. So it was like a day's motivation to help people in the world is what I lost last night with that. And I didn't want to lose that, you know, that's all I was talking about really. Okay, cool. Much love to everybody for tuning in. Really do appreciate it. Luke Spears, good to see you. I never use stop losses. That means sometimes I take very big losses. Lol, funny sentence there, Luke. Yeah, Andy, I've done that many times. It's what truly makes trading hard for most. TA is TA. Our emotions or feelings can alter our perception of the facts we see right in front of our faces. Yes, it can indeed. And also, I took 4 leverage puts, Rocky, from the hop. You did you? Did you? Did you really? That's cool if you did, man. Tell me about it. Yeah. I think you did great regardless. It's about all your trades overall. I'd follow your losses more than your other gains. Yeah, I think that's the point, really, right? You can, if you want to look at a YouTuber who can show you fantastic trades that they made and all that sort of stuff, there's plenty of them. They're coming, they're wall to fucking wall, right? I don't talk about trading at all. I talk about trading non-stop. I don't talk about my own trades at all because I've got because as far as I'm concerned, it's part of one of the core principles for me of integrity. And what I do as an individual, and I don't really care what anybody else thinks about it. I've got a really quite well advanced sense of morality, and I've really actually got an incredibly well refined sense of ethics. It's very, very, very strong, and that's part of that for me. So I don't mess around with that. I'm quite strong on as a person. As we see the prices now at 49,000, you know, and this was the trade to make right last night, and I fucked it up, and I'm here telling you about it. And it's ironic, and it looks great as well. It's a really great example to show fill price. You know, if I showed you that, if I had the full thing over here, it would say 0.3333 Bitcoin, fill price 52,973, stock market over here 52,973. That's where I looked this morning. That would have been where I'd have had one of my take profits, and I would have had still some left on the table, and I'd be sat here right now, and I'd be saying to you, look how good this trade is going for me. No, actually, no, sorry. I wouldn't be saying anything to you right now about it. The story wouldn't have made into your content. You wouldn't know. You wouldn't know. You just wouldn't know. What would have happened is I would have taken some profit there, and it would have happened off scenes, you know, or whatever. Nobody would have known about it, and then I'd be sat here looking at this, and the most I would have got to saying about it is, I'll go and check my trading account after we're finished here because I'm interested in seeing how that Bitcoin price is getting on. That's the most I would have said about it. Did the same thing about Theta the other day. Right, much love. Oh, Theta. No, Theta USDT 780. So like I say, you don't find out about all my trades. They don't all work out badly. Some of them go all right. Catch yous later. Anyway, thanks so much. Big shout out to everybody who joined me for today's show, bringing up the chitter chatter here. Christy, thanks so much for today. Thank you so much. Oh, that's a donation as well. Christy, you're lovely. I hope you're doing well. Janine W, thanks so much. Now you're up a $5. That's really nice. Mikey Forrester, no, Mike Fitzpatrick. Sorry, I have Mikey Forrester on the mind. It was great. I got in early. Thanks so much. That was that. We were talking about AIE. You gave me $9.99 twice for looking at that, so I'm really appreciative of that. $2 from Frostcrest, plus $5, plus $5, plus $5, plus $10. Plus $5, plus $20 from Frostcrest. Really, you know, Frostcrest plus $10. Frostcrest, man, seriously, 10, 20, 25, 35, 40, 45, $49 you've given me today, Frostcrest, man. That's really nice of you. That's really, 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 really nice of you. You know, so thank you so much. If any of you ever feel out there in the world, Learn to Live, that's a great name. They suspect that taxes won't be paid on gains from shorts paid upon close if they are taken from the market. Taxes equals margin call is the theory. They suspect that taxes won't be paid on gains from shorts. Learn to Live, go and read about taxes on shorts and all the rest of it as well. Yep, you're right. You're right. That's all great. You're right, man. That is the theory. That's the theory, which is called, which is practical working fact, historical fact. That's been the case for a long period of time, and is something that is maybe the second thing that anybody who finds out about MOAS should learn after the first thing, which is the other one we talked about. It's remarkable to me. This is why I'm remarking on it again at the same time, feeling flabbergasted that people would be so incredibly irresponsible with their money that they would invest in GameStop without knowing this. That's incredible. Stop being irresponsible with your money. That's incredible. I mean, the fact is that you've invested in a good company and all the rest of it. well done to you. But that's incredible. Stop it. Stop doing things like that. Stop it. Learn. Learn about the world. Start learning now. Stop making the mistakes. Right, great, excellent. Glad I got that out. Excellent. Thanks so much then, and to everybody. Reverse roll call. T1000, thank you. Katie Babes, Trade Spotting, Electro Boy, and we've got King Ming. Thank you so much. Be sure to subscribe. By the way, pal, I did turn off my whole subscribers only for chatting thing today, so do that. Kala, there you are with your really pretty shoe avatar thing there. I like that, by the way. I like your picture. Ashley, good to that. Thanks. You're welcome. No problem. Fabulous. Whatever. Hey. And all that. Thank you as well to John Skinnars for tuning in, that jiu-jitsu guy. I've also got a friend here in the channel that you know, you talked on the live stream I did yesterday. If you look in the comments, that guy with the kendama and that jiu-jitsu guy and that guy with the kendama, I feel like name-wise you would get on well. Banana Fridge, thanks so much for joining me as well. Vivena, it's good to see you too. Smug Slug, Nakbo, Dad, good to see you. Andy A, and you know, lots and lots of people here that tuned in, so I really do appreciate the likes of you. You've got Stonkmerica. I hope that you subscribe. Sorry I had to look at Astro Stream. 3.2 people watching him trying to match up a fractal pattern with the current price movement. Let's just quickly go over to look at actually, I don't care, he's just a nobody. Fuck Astro. Please, by the way, I tell you what, I'll add names of other YouTubers to the thing that removes your comment. If you if you keep talking about them, please stop talking about other YouTubers. Stop wasting my environment and my energy and my air with bringing up other YouTubers and putting me into a situation where I'm forced to talk about somebody else. I'm not forced to, but I find myself talking about somebody else negatively purely based on the fact that somebody else brought somebody else up, and I'm trying to say stop watering down me. I'm nothing like Astro, right? Just because Astro happens to talk about the same stuff that I talk about, we've got zero in common. You know, you yourself have talked about the weather before. Does that mean that you and Hitler are the same person? No, it doesn't, right? It doesn't. Does it mean that you and Jesus are the same person? No, it doesn't. It doesn't mean that, right? He's talking about GameStop and he does technical analysis. There's nothing at all about him which is any way at all related in any way to what I do on my channel at all, in any way at all, unless you're so unfamiliar with what goes on in this in this channel as to think that because I talk about finance stuff that we're the same thing, which is like so unsophisticated. But sure, in which case, yes, the World Cup for soccer is exactly the same as the Super Bowl for American football. Yeah, they're the same thing. Sure they are. Sure, they're the same thing. Exactly the same. Completely fungible and interchangeable. No, I would have already tuned out by this point. I'm still on here. Please never, ever talk about any other YouTuber ever on my channel, or I'll ban you. I'll maybe ban you. I'm not joking. For example, Rob on Jamie's stream the other day, when he was getting drunk and having a good time, came in and talked about Astro, and he sent about 7 messages. If that happened on my own stream, I'd have banned you from the channel, even though you are a channel member paying money. That's a rule. I don't want to have to write it down because I'm above it. I want my audience to start being above it too. Thanks so much for tuning in. Really do appreciate it. As ever, my name's Rocky Outcrop, #1 place on YouTube for technical analysis. We're all friends here. Everybody gets on really, really well. Astro, join the audience, and I'll love you just as much as anybody else. Continue to do YouTube stuff, and I'll continue to be completely ambivalent about your entire existence. That's right. Thanks so much. Hit like on the way out. Really do appreciate you. Love you all. See you all later in the Discord.